forecast is not enough. You really have to look at what's coming in and really make tough decisions about where you think the economy is. And I think that's where the Fed is.
The final paragraph, he talks about the limits of our knowledge. As you grind it out every day at the conference board, what's the limits of your knowledge in studying the American economy? What's the biggest mystery or opaque issue out there right now?
I think the big word is uncertainty, right? Uncertainty doesn't fit easily in models, and that's what we've had. We'd have a number of shocks, repeated shocks, that really just upend things. And so certainly for businesses, uncertainty is holding them back from making really big investments unless they see a big return. So I think that's the challenge we're facing.
I need a single point estimate here. What's your nominal GDP call for 12 months forward?
I think it's 2.3%.
Real GDP. What's
GDP.
Nominal GDP going to be?
Oh, nominal?
Sub 5? Sub 5%?
If you add around 3% inflation, it's just a little bit over 5.
That's not bad. That's solid.
Yeah, well,
that's solid.
That's seriously what a lot of people are saying. What is your number one question after hearing that speech, Dana, before we let you go get geared up for the Western-themed dinner tonight?
Well, my number one question is, well, what happens on September and then thereafter? Our view is that the Fed can move slowly as long as we don't have big downside shocks to the labor market. Chair Powell said they're mostly focused on those downside risks to the labor market, whereas they feel like they've more or less eradicated the risks associated with inflation.
Is there a difference to you if they go by 25 basis points or 50 basis points in September?
I think in the grand scheme of things, it's not really that important because you're still going to have a very restrictive policy rate. But it does send a message. If the Fed goes 50 basis points, it suggests that the economy is in trouble. They see really dark clouds coming and they need to get out ahead of it.
Dana Peterson, always wonderful to see you. Thank you so much for being with us. Dana Peterson there, chief economist at the conference board. And that to me is really one of the questions. You know, what are they signaling to markets if they cut by 50 basis points, Tom? I think that Loretta Mester actually put it very well, that if they go by 50 basis points, the market will go even further. And if they go 25 basis points, that doesn't negate the idea of going further later on.
You're going to be in trouble here. I'm not supposed to give my opinion on this. I'm not going to do it now. I think it's just a strained discussion. I think we've heard that today from a number of voices of getting to the drama of 50 basis points. That Dana Peterson just told us we've got a 5-ish nominal GDP. That's not a recession. And the critical question unspoken here in Fedland is what are earnings going to be? And as we get through September, modeling out Q4 earnings, beginning the complete mystery of 2025 earnings is just as important.
Will companies adapt and adjust?
Yeah, I don't, you know,
I'm just
they're going to adapt and adjust, and we're seeing that in a lot of micro things. To Dana's point, we may really adapt and adjust in consumer areas like retail. That may be the key focus.
Well, coming up next, adapting and adjusting to the speech, former Kansas City Fed President Thomas Hoenig, as they parse through all of the different Fed officials, parse through Federal Reserve Chair Jay Powell's speech, which lasted longer than 8 minutes and sent a clear rate-cutting signal. From a beautiful Jackson Hole,
it's gorgeous.
This is Bloomberg Surveillance.
Who is the Vivian Tom clientele?
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet
general advice is continue to seek out companies or people that are maybe 1 stage or 2 stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
And the victory signal that we seem to hear from Federal Reserve Chair Jerome Powell.
Well, I understand where he's coming from, first of all. And, first of all, we have an economy that is strong but slowing, which is what you want. You have a labor market that has been strong but slowing, as you would expect and want. And thirdly, you've had a relatively tight interest rate environment. If you think about it, real interest rates are between 2.25% and 2.75%. If the equilibrium rate is around 2, you're modestly tight, so you would expect a continuation. And that's what he said. We expect to see a continuation in the decline of inflation. So with that in mind, we are getting close to where we can make a cut. So that's the statement. But the fact of the matter is, and here's the catch, inflation is between 2.5% and 3%. I know they like to use the PCE, but there is a CPI too, and the CPI is 3%, and that's what people index to, and that's what people look at. So inflation is still, if you say 3%, it's 50% above target. So why are you in such a rush? So that's the counter argument to that. But I think based on what he said was, we're very close. The next move is down, and that's what they've been saying for 9 months, and that gives the markets kind of if we're going to speculate, let's speculate long, because rates are going to go down.
The heritage of this discussion out of your Iowa State economics and all you did in building Kansas City is a distrust of those people over on the East Coast and maybe the left coast about the debt and the deficit. Yeah. Tom Honig right now, you got every Trump supporter, every Harris supporter is looking at the debt and the deficit and saying, you've got to be kidding me. How afraid of you are the fiscal realities of America folded into our monetary policy?
Oh, it's very much folded in. For example, regardless of what they do, the deficit is only going to grow. We know the interest on the debt is exploding. We have a huge deficit of $2 trillion. It's going to continue to be well above $1 trillion for some time. So here's the question: who's going to loan them the money? Is it going to be the foreign interest? They're pulling away from the dollar somewhat. Is it going to be domestic? Well, how much do you want to take away from the private sector to fund the debt?
Right.
And then maybe redo it in some kind of fiscal stimulus, which is less efficient? Or are you going to turn to the Federal Reserve? And I call it knocking on the central bank's door, because when you're the only source, if you're going to keep interest rates from exploding, the Fed's going to have to print money.
It's well reported you've got Krugerrands in your dresser in your bedroom. Gold at 2,500. I mean, we go back to Wayne Angel. We can go back further than that. The primal Midwest economics has got to be screaming about the combination of the debt and the deficit and gold at 2,500.
Well, I hope it's more than the Midwest, because it affects the whole nation, and it is a very significant problem. You know, the dollar used to be a stable coin, right? Tied to the gold.
This is the first. Somebody take a note. Tom Harnett quoting Bitcoin. Stable coin. Really.
Well, look at it. It was backed by the gold, and therefore you had discipline around it. Now it's all fiat, right? Which is fine if your policy is.
Can we extend an hour? He's just getting fired up.
Look,
well, think about it. That's all I'm asking you to do. Think about it. What is the discipline to the value of our currency? It's the FOMC. With more and more pressure coming from the size of the debt that we have to fund, someone has to fund that.
not to go too far afield when we're talking about the gold standard, this goes back to the question of inflation and just how pegged inflation is in this economy that does look different than it did pre-pandemic. Do you have any concerns about the fact that we don't understand neutral and we talk about normalizing policy without a sense of where we're going?
Well, I think people know where we're going, and you know the estimates on neutral are like every other estimate. It's not certain, but many researchers now are saying neutral is around 2%. So if neutral is 2% and the rate, the Fed funds rate real rate is 2.25% to 2.75%, you have a tight policy. And the other part of it is, and I will say Chairman Powell emphasizes, is inflationary expectations. So if they can stay firm in terms of we're not going to ease so much that we reignite inflation. We don't know what that is, but we know we are somewhere around real rate of 2%. We'll get our rate down to 2% as inflation comes down. And if they move in September, the main thing will be how they message it. Because if they don't message it right, the markets will immediately start saying, well, when's the next quarter or 0.5% point? And then you will lose that anchor.
I like what you said because it hints to where I was going to go next. Is this a Federal Reserve that wants to see a market rally? Because ultimately that's more supportive of no further deterioration in the labor market.
I think this is a Fed that doesn't necessarily want to see a market rally, but it does not want to see inflation reignite, nor does it want to see unemployment start to rise. So they're in that tight spot, and that's why they're being very careful as they go forward from here. But they have a lot on their shoulders.
There's a state in the vicinity of Tom Honig. It's called Missouri.
Yes.
McChesney Martin came out of Missouri, and he and Truman of Missouri had a pitched battle in the early 1950s. Are we going to redux Fed independence battle into 2025?
Well, yes, it's possible because of the pressure to print money to buy the debt of the U.S. government. And that's when the Fed, I think it's hard decisions are ahead of them because I think the Fed's going to have to say, behind the doors, I don't care how they do it, Congress, get your house in order. We cannot carry these kinds of debt forward and retain ourselves as the strongest, most reliable currency in the world.
We're out of time. Can you get chip beef on toast back on the menu at the Pioneer Grill? With all your power, can you get the menu back to what it was?
I'm not hosting this anymore, so my power is kind of limited, so I can't promise.
Honig exits and they put avocado toast on the menu. Avocado toast at Jackson Hole.
I'm a fan. Former Kansas City Fed President Thomas Honig joining us here in Jackson Hole. Thank you so much for being with us. It was a seminal speech. Maybe not the 8-minute Spain speech that goes down in history, but this really was historic. This is a Fed chair declaring not victory, but the end of a tight cycle that led to what a lot of people think is potentially a soft landing. Now, the question is how much, to Thomas Honig's point, how much are the hard decisions ahead of them as they try to navigate the fiscal with the monetary policy?
I'm going to be talking to Paul Sweeney Monday about what Powell said about a need for humility and the lessons learned coming out of the health disaster, let's remind ourselves that pandemic is only equivalent to post-World War I. And this new humility that he mentioned to me was a key paragraph, without question.
Let's take a look at what humility looks like in markets. Humility looks like a rip-roaring rally as people welcome what we heard from Federal Reserve Chair Jay Powell. We do see the Russell 2000 outperforming up more than 2%.
Look at the euro edging 112.
But yes, that to me is interesting. The fact that the euro is the strongest going back July of last year. Dollar weakness across the board, 111, almost 112 for that euro. 10-year yields lower by about 5 basis points. 2-year yields lower by a bit more as people bake out how much they could potentially cut rates, not 25 or 50 basis points next month, but also beyond that. Coming up next from Jackson Hole, don't miss this, Philadelphia Fed President Patrick Harker and his take. Later today, Chicago Fed President Os Goolsbee and former Kansas City Fed President Esther George. This is Bloomberg Surveillance.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and
for policy to adjust. Full stop, that's what it is. He didn't push back, though, or try to manage the size of the cut, which I found quite interesting. S&P spiked to the highs of its session around that speech, and now it's falling just a bit, but still up by 0.7%. The bid in the bond market, though, continues. Yields lower all across the curve. Really, that 3.92 is where we sit now on the 2-year. James Bullard said that this speech will be studied for many years. So that was very striking here. If they can really pull off this soft landing, that'll be something.
That'll be something. And, I guess my reading or my listening of the speech was a clear mentioning of making this pivot. The time is now. And I think the magnitude, the frequency of the rate cuts will still be data dependent because there is some data to come between now and September.
What data?
Well, I think.
Well, is it going to be inflation? Is it going to be labor market?
Very good.
If it's labor market, I'm still really scratching my head about those labor revisions. So am I putting all my stock now into September 6th and Friday when we get the jobs data for August, or no?
Yeah, I think so. I think the jobs issue is probably front and center, maybe a little bit more in terms of vis-a-vis the inflation. The inflation data seems to be pretty clear, but the jobs data, again, you don't want to be too light here with rate cuts if, in fact, you think this labor market is weakening perhaps more than the numbers might show.
So you got rising unemployment or higher inflation, and has that balance of risk shifted? And it does seem to indicate from Powell that maybe it's the rising unemployment. However, not all Fed officials have been saying that. I mean, we heard Schmidt yesterday that he's still worried about inflation, that they do want to see more data on inflation. So I wonder just how unanimous the balance of risk is in the Fed right now.
Yeah, I don't know, but I tell you, the markets liked what they heard today. S&P up 0.8%, the NASDAQ up 0.1%, and the Russell up 2.5%, giving you a sense that these small cap stocks, small cap companies clearly will benefit from lower interest rates environment.
Yeah, and just taking a look too at other asset classes, right? The Bloomberg Dollar Index down 0.8%. The pound hit like a 2-year high in relation to the dollar during the speech, and also bid into the bond market as well. You have a lower by about 7 basis points there. All right, now we go back to Jackson Hole. Michael McKee, Lisa Bromwitz, Tom Keene with Philadelphia Fed President Patrick Harker joining us right now.
From Jackson Hole for our radio and television audiences worldwide, this is a Bloomberg special interview following up on Jay Powell, Fed Chairman's speech here in Jackson Hole. We have Philadelphia Fed President Patrick Harker joining me, Lisa Abramowitz, and Tom Keene. And we'd like to thank you very much, Pat, for coming out.
Sure.
Interrupting your seminar. Rumor has it you're going to cut rates.
Yeah, that's what I hear.
Was it you've been somewhat reluctant? Are you on board?
No, I said the last couple of days that it's time to start a process. And I think it's a process. It's not about a particular number.
the process needs to be dictated by the data we see, but we need to start moving rates down. No question about it.
Well, if you start moving rates down, the one thing that didn't come through in the speech is by how much?
Yeah, and again, I think we need to let the data dictate this. I think what matters more than a particular number. Now, I've been out and about my district all summer talking to contacts. And one thing I heard is 25, 50, that doesn't matter so much as commit to a process, be methodical about the process. In particular, because what I've heard, particularly from the bankers, is they need time to absorb the changes. So don't just stop and start. Don't just do a large decrease and then stop and then start again. Just start a process and keep it moving.
This, to me, really underscores what Loretta Mester was saying, formerly of the Cleveland Federal Reserve, where it makes sense for the Federal Reserve to go by 25 basis points to begin with, and then potentially cut more significantly later on, because then you're not signaling to markets that you're going to go much further. Is that what you agree with?
Yeah, and we'll see how things, there are a lot of risks still out there in the economy, in the global economy. So we start with 25, and we just let it run and keep moving. And we're already seeing it, right? We're seeing the long end of the curve start to come down. That's been good. The mortgage business is back. You talk to bankers, they're starting to write mortgages again. That's all good news for the economy.
I've got to ask the engineer the question. Susan Collins was channeling Patrick Harker here the other day. She says, we need to lose the pessimism. We need to be more optimistic about where we are right now. What do you more than anyone I know listens to business. Yeah. What are you hearing from business about investment next year, about their confidence forward?
Yeah, they're cautiously optimistic, I would say, right now. I think they are optimistic, but depends on the industry and depends on where they are in their own business cycle, right? But yeah, generally we're seeing, take housing, for example. Housing's a good example. We know that a lot of developers are sitting on their hands waiting for rates to come down, for this process to start. I think that's a good thing, because we need them to build affordable houses, low, moderate income houses. And I think they will do that as we start this process.
When the chairman spoke today, he suggested that the balance of risks has changed. Inflation is coming down, and it's probably not going to shoot up again because of the rising unemployment rate. But the rising unemployment rate, in turn, is a bigger risk at this point. How much of a risk do you see of downturn from unemployment?
So I don't see a large outside risk. The unemployment can go up some, right? And it probably will go up a little bit. It will definitely, in our view, not peak above, say, 5%. I mean, it will be below that for sure. No, not for sure. Nothing's for sure. But you got to look at the totality of the data, too. It's not just about that number, right? It's about what we're hearing from our contacts, the claims data, the job-to-job transition data. There's a host of data you have to look at.
Well, this is a confidence question. Recessions are always a confidence question. You're talking about confident CEOs that the business is going to be okay, but what do you hear from the average person who could pull back if they see the unemployment rate going up?
It really is a tale of two consumers, to simplify things. Those who have the money or spending the money, they're not that concerned. Low, moderate income households are really still feeling the pain. They're feeling the pain of housing prices, food prices, you name it. So they are very concerned. So it really depends. It's not one size fits all. There's not the average consumer. That person doesn't exist in our economy.
So everyone's talking about this process, right? You talked about that too. This is the beginning of a process. One thing that Neil Dunn noticed was missing was the word gradual from Jay Powell's speech. We can get to that in a second. Do you have a sense of where we're heading?
Yeah, so I like the word methodical. That's what I'm hearing from my contacts. Please just make it so that we know where you're going in a very clear way, and then you start that process, and don't just stop and start, as I said earlier.
So where are you going?
Well, we're going to go back to whatever that new neutral rate is.
Well, do we have an idea of what that could be?
Yeah, I mean, we don't know exactly what it is. We'll know it when we get there. Let's be honest. You can't know it a priori. But it's probably around something around 3%-ish, or somewhere around there. But we don't know that for sure.
One of the new things with social media is wonderful people. There's a guy named Triple Net Investor that's out there reviewing empty office buildings trading for next to nothing.
Right.
I got good news. Philadelphia is not on the latest list of this city, that city, and the other city. From where you stand and from all your contacts, and Philadelphia's led on this, where are we on the washout and cleanout of commercial real estate?
Again, commercial real estate isn't a one-size-fits-all thing. So downtown office is what we're talking about. The dentist in the suburban office mall is doing just fine, right? It's that downtown office space. We are starting to see that clean out some. Again, it's going to take some time. Whether it's new businesses moving into that space at much lower rents or conversion. We're seeing a lot of conversion activity as well.
Do you have a confidence that the banking industry is resilient to that conversion?
So far, yes, I do. But it's something we clearly need to keep our eye on.
Well, sticking with real estate, let's talk about the residential side. You were optimistic at the start of the interview here, talking about mortgages coming back. There's been a lot of criticism of the Fed maybe breaking the mortgage market because interest rates rose above what the majority of people had for their mortgage rate. Do you have an idea of what level housing it takes for housing to come back? And does that figure into your calculations of where neutral should be?
Yeah, so we had to do what we did to get inflation under control. So no apologies that we took rates up quickly. I think about my generation, the baby boomers, the largest generation to go into retirement. We're sitting on these low mortgages. We want to move. We don't want that big house anymore. That lock-in effect, it will start to ease as rates come down. And we're already starting to see a little bit of that. Again, I talked to the bankers, they're writing mortgages again, not just refis, but they're writing new mortgages again. That combined with the new supply that'll come on the market, I'm pretty optimistic that we can get there.
This is a critical statement from Mr. Harker. The idea of when the rate comes down, where does the fever step in again? Are you looking in Jackson?
It would take a lot.
It would take a lot.
It would take a lot for that to happen. Another question that comes up now that you're essentially starting the path to rate cuts is, what do you do about the balance sheet? Because in theory, they work in opposition to each other, and it had been sort of the Fed's policy that we wouldn't do them simultaneously, but it looks like you're going to be doing that.
Yeah, and that's okay. I think, again, I've always been in the camp of putting the balance sheet on autopilot, essentially, starting the process, letting it run until we get there. We definitely don't know exactly where that's going to end. The data will dictate when we end that process. I'm okay with doing that because it's in the background, it's running. We need to get back to ample reserves. We don't know what that number is, but we'll know it when we get there.
Have you got an estimate about when that might be?
I do, but I'm not going to. Because it's so uncertain. We had an estimate last time we did this, right? And we were off. So I'm cautious about that.
If he told you, he'd have to kill you. I think that there's this question right now about heading into year end, and Adam Posen was really highlighting this earlier. There's this anxiety about what the fiscal backdrop will do to derail some of the calm, the methodical aspects of Fed policy. I don't know that you can or want to comment on basically what that policy could be. But how much does that keep Fed officials up at night? How much is that part of the discussion, what you have to do to respond to any potential expansion of the deficit that could be inflationary next year?
So I stay out of fiscal policy, obviously.
But you have to respond to it.
But we have to respond to it, exactly. And so I can't speak for the Fed either, but for myself. What keeps me up are many risks. That's one of them, right? There's also, if we see what we're seeing around the world, these conflicts get worse. I mean, that would be tragic, the humanitarian tragedy alone, but the tragedy also to the economy, the hurt to the economy. So there are a lot of risks that keep me up at night. That's just one of them.
Well, but do tariffs worry you more or the deficit?
Depends. It depends. The devil's in the detail. Like, what's specific about the tariffs? What specifically we're investing in terms of deficit? You know, I'm a simple guy. I think if we're investing in something that's improving the productivity of the American economy, that's a good thing. If we're spending money that doesn't do that, that worries me more. So again, it's not just one thing. It really depends on what we're doing.
Well, you mentioned productivity. We had the big revision to the non-farm payrolls this week, but that should raise productivity. You view that as good news offsetting the bad news of lower job creation?
That's an interesting way of thinking about it. Yeah. We were expecting this adjustment. We looked at, in the Philly Fed, we've been looking at the payroll adjustments, and we knew this was coming. It was a little larger than we expected, but we knew it was coming, so that wasn't a surprise. And it's still a good number overall. If you average out over 12 months, we're still doing just fine in the American economy. But there's risk there. That's why we need to start to take action now.
Well, we'll see you on September 18th. Patrick Harker, president of the Philadelphia Fed, thank you very much for joining us on Bloomberg Radio and Television Worldwide. And for myself, for Lisa Abramowitz and Tom Keene, we'll send it back to you.
All right, very good. That was Philadelphia Fed President Patrick Harker speaking with our very own Michael McKee, Tom Keene, and Lisa Abramowitz out there in Jackson Hole, responding to the speech by Fed Chairman Jay Powell. It's Alex Steele, Paul Sweeney back in our New York studio here. Market Drivers today is brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low, transparent commissions. Learn more at ibkr.com/bonds. Markets on the move on the back of Fed Chairman Jay Powell's comments. S&P 500 up 0.7%. Let's see where the action is in the market of the individual names. We do that with Nora Melinda, Bloomberg Equities reporter, joining us here in our studio. Nora, what are you looking at?
Well, everyone is really loving that speech out of Powell from earlier. We're seeing real estate as the best performing sector in the S&P 500. Not a surprise there, especially with it being one of the most rate-sensitive sectors in the group. But as I'm looking at some individual names, I'm taking a look at Topgolf, getting ready for the weekend, gearing in.
Okay.
We're seeing shares.
What's Topgolf again?
Really?
Yeah.
Alex.
Sorry.
It's like golf.
Golf practice center. You can just hit golf balls all over the place.
Do I look like I play golf?
And you can drink. You can drink food, and so it's a whole social thing just centered around hitting a little white ball around.
Gotcha. Okay, but it was mini golf. Okay, then we're talking. Gotcha. All right.
Well, those shares are clawing back after tumbling about 3.5% today because Raymond James slashed the stock to underperform from outperform. So that's definitely a double downgrade there. It's saying that its acquisitions have led to a bloated balance sheet with a hefty debt load. It says that the recent deterioration in same venue sales has really been weighing on the stock, but it does like its openness to a potential spinoff, but says its leveraged balance sheet appears to limit its opportunities. That sounds a little shady there, but
you don't like the leverage.
Here we go.
The leverage is going to be tough, but if rates come down, that's going to be something.
Exactly.
Workday.
Yes. Quick look at this. We're seeing shares rallying for their best day of the year, rallying as much as 11%. And this is after the company is really signaling a new focus on profitability. Execs are saying that the company would sharply increase profitability over the next 3 years. So great news for investors here on this Friday morning.
All right, Norma Linda, thank you so much. We appreciate it. Norma Linda, she's equities reporter for Bloomberg News. I'm looking at the screen. Lots of things moving all over the place. Stocks up, yields down. I'm looking at gold up 1.25%, oil up 1.9% on WTI crude oil. Is there a correlation there? I think our next guest has some thoughts on that. Mike McGlone, senior commodity strategist for Bloomberg Intelligence, zooming in from Miami, Florida. Mike, what's going on with gold and crude?
Paul, hello. We have the difference between an enduring bull market, that's gold. Right now it's at, if you end the month now, it's at a record high. And an enduring bear market, that's crude oil. The price on the screen you see right now, WTI, $74 a barrel, about there, was first traded in 2006. That's almost 20 years ago. And as we tilt towards this easing cycle, typically that spread with gold outperforming crude oil widens, and it looks like it's just getting started.
First of all, you buried the lead. We're not coming to Miami, Mike, so you can stop looking for fun things for us to do. You can not worry about your guest rooms. Like, we're good. So the record high, though, that we saw back in gold that we keep hitting here, I'm really struggling as to what is actually leading it, because the last 10 years when we had low rates and all that, gold did a whole lot of nothing. And it has just been feeling like a nonstop tear in the last few years.
Yeah, let's start with two things. The unstoppable rise in U.S. debt to GDP, the very expensive U.S. stock market, the Federal Reserve tilting towards easing, and the most significant elephant in the room is the unlimited friendship between President Xi and President Putin. That shifted the world order in favor of gold, and it looks like it's accelerating. So the biggest, deepest pockets on the planet, i.e. starting with China, have been buying the metal. And it looks like once we get a little bit of reversion in lower yields, i.e. T-bills not at 5% anymore, and maybe just a little back and fill in the stock market, gold will shine. It looks like it's continuing to do that. Now, right now, it's a little bit overdone. Managed money net positions, i.e. futures, are really long for a reason. It's a bull market. But the narrative for gold is quite strong. And I'll just end with this. Gold is historically very cheap versus S&P 500. If you just take it divided by the ounces divided by the index, particularly when you enter recessions. What oftentimes happens when you enter recession, the Fed eases, that spread just kind of narrows a little bit.
What would change this? It seems to be a structural bullish call on gold, Mike.
Yeah.
What would need to change that?
I think the first thing is the U.S. stock market to stay resilient. Well, why buy gold when it's that resilient? The most significant thing was some kind of unexpected détente, i.e. President Xi picking up the phone saying, yeah, we're done with this unlimited friendship. The détente that's happening globally is part of what's really driving gold, i.e. somewhat getting away from the dollar, looking for an alternative to U.S. Treasuries, particularly with yields dropping and the debt to GDP just continuing to rise. So that, to me, would be one of the most significant things. Otherwise, it looks to me, once we get a bit of reversion lower in the stock market, which at some point will happen, gold will probably shine like long bonds. Like on the month now, on the quarter now, gold's up about 8%. The U.S. Treasury, the Bloomberg 20-plus long bond index is up about the same, about 8%.
What about positioning at this point? Like, I know the central banks are buyers, et cetera, and that and price spikes, you're not going to see a lot of physical buying also, et cetera. But who's left to buy in the futures market?
That's a key thing, Alex. A good point. About 44% of total COMEX futures positions are speculative longs. That's very high. The high really gets much higher than 48. But what's really happening is we've had significant outflows in gold ETFs since that peak in 2020. They're just starting to turn to inflows. And I think that is part of that alternative you see with people going to cash and bonds. They're looking for alternatives to the expensive stock market. So that looks like it's just rolling over. But if you got a day like we had on August 5th when markets go down, yeah, you sell what you can. And there's a lot of speculative longs in gold at the moment for a good reason, though. It's a bull market.
That's a trader's term. You sell what you can.
Yeah.
Yeah, on those days. Hey, Mike, thanks so much for joining us. Appreciate it very much. As always, Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. I'm looking at like some of the, whenever I talk to Mike, I put up GLCO, the global commodity price screen. You look at the corn, cotton, soybeans, they're all off like 20, 25%.
Yeah, I mean, the good news is that crops are going to be huge this year.
Yes.
Bad news is for farmers, the crops are going to be huge this year. Right. So like we could be hitting price cycle lows that we haven't seen in like 10 years. Like, this could be pretty brutal.
Yeah, that's going to be interesting. And it goes to farm income. That goes to companies like John Deere. You know, you always looked at John Deere as a company as a good proxy for how the farmer's doing out there. And John Deere they had a good quarter, I remember, but they were cautious in their outlook. What's not cautious is the market's reaction to Jay Powell's comments from Jackson Hole today. The S&P 500 up just about 1%, a little bit more than that. NASDAQ up 1.3. Russell, the small cappers, up 3%. That's where the action is. Yields down 380 on your 10-year. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen after Fed Chair Jay Powell affirmed expectation that officials are going to begin lowering borrowing costs next month and made clear his intention to prevent further cooling in the labor market. Now, Powell also acknowledged recent progress on inflation.
After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%.
But Powell's address offered few clues as to how the Fed might proceed after its September meeting. Now, aside from Powell's keynote, we also had some economic data come out. July new home sales blew past estimates, reaching the highest since May 2023. Now, lower loan costs, that could be the driving force. There were also more homes to choose from, and the median sales price declined. Stocks reacting to all this news. We have the NASDAQ, Dow, S&P 500, all above 1%. We head over to the two-year yield, 3.92%. Down 8 basis points. The yield on the 10-year, 3.80%, and that is down 5 basis points. Quick check of commodities. We have spot gold higher, 2,514 an ounce. Brent crude, $78 a barrel. WTI crude, $74 a barrel. That is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual.
Bam. BAM
Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in BAM insured bonds. Our next guest joins us, Amanda Albright, municipal finance reporter for Bloomberg News, also formerly of the Daily Tar Heel, which means she went to the University of North Carolina, which means somehow she got through my screen of no Tar Heels on this program. But she's pretty solid there.
Watch out.
Amanda, talk to us about the municipal bond market. You guys have a lot of great stories out recently. The one that really grabbed my attention is colleges need up to $1 trillion of campus upgrades to lure students. And I guess they're coming to the municipal bond market for that?
Yes. So Moody's put out this estimate that colleges and universities might need 750 to 950 billion of spending on infrastructure, facilities, dorms, classrooms over the next decade in order to essentially stay competitive. The interesting thing about that number is that only encompasses their universe of credits that they rate. So the actual number could be even higher. It was interesting. This story came out. Basically, the argument that Moody's is laying out is that colleges need to have really pretty campuses in order to attract customers, their students, and their students' parents who want their kids to go to a really pretty looking school and have kind of that pride. But interestingly enough, after this story came out, I got some messages from readers that disagreed with this premise and think that schools need to focus on teaching students and providing a good academic experience, and they don't need to think about facilities. So it's an interesting topic within higher ed, and that kind of balancing act that colleges are facing right now, trying to invest in facilities, trying to lure students, but also keep costs low and focus on their core mission. It's kind of one of those core debates in the higher ed world at the moment.
Well, also, isn't it true that like the tuition, even though tuition's insane, and we're talking like $80,000, like that doesn't cover at all necessarily one person's entire education there too?
That's true. I think the interesting thing that I think colleges will need to grapple with, and something I'm interested in, is how much they kind of break down those costs for future students. You know, how much of tuition dollars are going to facilities? I think that's an interesting question.
All right, more money going to universities, less money going to municipal funded detention centers on fewer inmates. What's going on there? Yeah.
This is a classic political situation in the muni market. We've seen with changes in political control, different approaches to detentions and corrections policies. And so I think really that story, which was a great story that came out, I think yesterday, it highlights this growing risk that muni investor, you talk to any muni investor right now, and politics are at the forefront of everything, especially the presidential election. The corporate tax rate could be in play. Individual tax rates could be in play. all of that will kind of affect munis. And then you have all these other, I guess, lower impacts as well, such as corrections projects. Like all of that is very affected by politics. So that's why muni investors are very focused on the election these days, along with everyone else.
All right, Amanda. Yeah, everybody else. All right, Amanda, thanks a lot. Amanda Albright, Bloomberg Muni Finance reporter, joining us from Kansas. Joining us now in studio, Mandeep Singh, Senior Technology Industry Analyst over at Bloomberg Intelligence. So this was a headline that Lisa talked to us about earlier in the morning, and we were both like, huh? Nuh-uh, that's not for us. So apparently Uber strikes an accord with GM Cruise in terms of Uber's going to have self-driving cars roaming around. Do I want this in my life?
Well, I think it's just a function of how technology gets rolled out. So
that's a yes from Mandeep, isn't it? He wants yes. Okay.
He's a forward-looking guy.
We see that already in 3 cities in the U.S.: San Francisco, Phoenix, and LA. And what Waymo has shown is they have the technology to have the car ride on its own. And even though the scale is very small, they're doing 100K rides per week. Wow. Compare that to Uber, which does 10 billion rides in a year globally.
Whoa, so what kind of rides are we talking about? Oh, 10 billion just regular rides.
10 billion regular rides.
Okay, got it.
So Waymo, compared to that, is doing 100K rides, so 5 million annually if you run rate that. But look, what they have shown is this is the future. And Uber is trying to figure out where they fit in this future because they don't have their own autonomous technology, so they have to partner with someone. It's not going to be Tesla. Tesla has told us they want to do ride sharing via their own app. They don't want a ride sharing intermediary. They have the fleet, they have the software, they have the app. Why use somebody else's app? And in the case of Waymo, even though they have a partnership with Uber, bulk of their rides are through their own app. So that's where Uber doesn't have a choice. It partners with Cruise. Cruise is, I mean, in terms of the technology, I would say way behind Tesla and Waymo. But at the same time with Uber, like I said, they divested their own autonomous R&D division back during the pandemic, so they are not developing anything in-house. And in this case, it's just a matter of getting what they have in the market.
You know, my first reaction is like a hard no. I'm not getting to an autonomous vehicle. But I get into a vehicle every morning at 4:30 in the morning with some dude I don't know.
Yeah, we're just not the early adopters. I think it's more to the point.
Adopters. All right. I mean, but what's better than the other? I don't know. So how does Uber view, this driverless technology? Is it long-term net positive or...
I mean, it's definitely a negative simply because Uber operates on an asset-light model, and even then it struggled to reach profitability. Right. Now it's at a point where the incremental margin is positive. What happens with autonomous rides is the incremental margin goes much lower because one, you have to license the technology from somebody, in this case Cruise or Waymo, so you have to pay them. And then the take rates go down because the autonomous rides have a much different unit economics than a ride with a driver. So instead of getting that 30% take rate, their take rate goes lower.
But eventually, I guess that's not true. I was going to say eventually the money that they'd have to pay to, say, GM Cruise, does that decrease? But no, it probably increases, right? Because GM's going to want to get more for their
Exactly. So if you don't own the technology, why would a GM or a Waymo or a Tesla want one more intermediary when they could do their own app with the fleet? So Uber has 2 choices. Either they license the technology or they start buying the cars. And if they start buying the cars, it's not an asset-light model anymore. So they have to buy the cars from Tesla, buy the cars from Waymo, and these are very expensive. Yeah.
Why then did they divest their R&D back in the pandemic? It seems like now I understand that long-term, that's a problem.
Yeah, it is. And back then, they were under pressure. Remember, when we went into the pandemic, all these companies had cash flow issues. They were burning cash every month. So the best option for them was to divest this, raise cash, and, it was never part of their long-term plans when it comes to developing this in-house. And I think right now it's proving to be a wrong decision.
So how then does Uber, if you're an investor and you're looking at Uber stock, how does that have to be re-rated then? Longer term, like short term, forget it.
So look at what we have now. Uber is still the scale player. I mentioned 10 billion rides.
Right.
And right now, they are the ones who have the most supply. Now, if this thing scales up very quickly, which I don't think anyone is betting on right now that autonomous scales, there's a lot of skepticism around taking these rides. So this will be more gradual.
Front and center, right there in front of you, yeah.
So in that case, I think Uber has more time on hand. Like nobody is thinking of a next 12-month scenario where Uber loses, 30% of their volume. We're talking about a gradual shift towards autonomous, and in that case, Uber has more time to do these kind of partnerships. I think Cruise is one. They'll probably try to partner with Tesla, if that would be my guess. Even if it comes at the expense of gross margin, they'll take the hit because it's all about existence and maintaining the platform. And
all right, Mandeep, we appreciate it. You here next week?
I am.
Oh, yeah. NVIDIA. See, I'm telling you. NVIDIA has changed everyone's vacation schedules.
That's a good point.
Mandeep Singh joining us, a senior technology analyst at Bloomberg Intelligence. Coming up, Dana Diorio will be joining us. She's co-chief investment officer over at InvestNet. Not only her view on Jay Powell, what it means for the markets and the bond market, but also we're going to look ahead to NVIDIA in that. Is it going to be a market event? And how do you manage that? And is the reaction function going to change? As you look at a market that the S&P is up a full 1 percentage point, volume isn't terrible. The NASDAQ up by 1.3%, and the bid to the bond market continues as well. Let's go to Michael Barr now for world and national news. Michael Barr, over to you.
Thank you very much, Alex, Paul, Lisa. Kamala Harris closed out the Democratic National Convention in Chicago last night. Harris took note of how she got there from President Biden's recent decision not to seek re-election.
The path that led me here in recent weeks was no doubt unexpected. But I'm no stranger to unlikely journeys.
Now the political focus shifts to Arizona today. Bloomberg government Zach Cohen has more on what to watch this day after the DNC.
The first key question is, what does Robert F. Kennedy do? An independent candidate who appears to be ready to endorse Trump's campaign and drop out of the race entirely, was really only polling, in the single digits in some of this polling, but would really crystallize this race as a two-party race. And could certainly change some of the polling and maybe some of the key battlegrounds that were particularly tight.
Bloomberg government Zach Cohen. Italian and British authorities are trying to determine how the luxury yacht owned by UK tech tycoon Mike Lynch sank so quickly off the coast of Sicily earlier this week. Bloomberg's Karen Moscow has more.
The yacht sank Monday in a matter of minutes during a violent storm. The Italian Coast Guard declared the end of search and rescue operations early today, having retrieved and identified the bodies of all those missing. But the judicial investigation over what happened could take months. Italian newswire ADN Chronos says prosecutors are now considering charges, including shipwreck, disaster, multiple homicide, and negligent injuries. The captain and other survivors have been questioned by the local prosecutor's office, according to Italian media, and the UK's Marine Accident Investigation Branch has launched its own probe. Karen Moscow, Bloomberg Radio.
Indian Prime Minister Narendra Modi has offered his role as a friend to bring peace between Moscow and Kyiv. Modi met with Ukrainian President Zelensky today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks soar, bond yields fall after Fed Chair Jay Powell reinforced those expectations that the central bank will slash interest rates in September while leaving that door open for more cuts. Let's get to the reaction on Wall Street right now. The Nasdaq up nearly 1.5%, 247 points. The Dow up more than 1%, 459 points. The S&P 500 up 1% at 61 points. We'll head over to the bond market. The 2-year yield 3.93%, down 7 basis points. The yield on the 10-year 3.80%, and that's down 4 basis points. To currencies, the dollar retreated against all of its major peers. Right now we have the Japanese yen up 1%, 144.84 against the dollar. The euro up 0.6%. British pound up 0.9%. We have Bitcoin up more than 1.5% at 61,000. To earnings we go. Shares of Kava, they're soaring. They're up about 19%. It's a Mediterranean fast casual chain. It raised its full-year outlook after posting second quarter results, beat expectations. A big part of it, the grilled steak offering. That was a popular choice. It also added a lot more side orders from customers. Pita chips and juice, also popular. But restaurant chain Red Robin, not doing as well. Their shares down 6%. Its guidance missed estimates, and it also cut adjusted EBITDA guidance for the full year. That is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from Interactive Broker Studio right here in the beautiful Midtown Manhattan on this Friday. So let's get to the markets here. Equities rally, you have a bid into the bond market, and the dollar's lower. It's classic. The Fed is going to cut. I guess the question is by how much? And then how does that affect your positioning? And the why they're cutting, too, very much important. Dana Dioria, Co-Chief Investment Officer of Envestnet, joins us now. Dana, how did you view the Jackson Hole speech by Powell? Was that 25 cuts for you in September, or was that 50? Oh, looks like we're having some audio issues. If you muted yourself, you can go ahead and unmute. But I think that's the point, is that clearly there's a cut, but the question is how big it will be. Dana, you there now?
Yeah, sorry about that.
That's
I'm not
okay.
sure. It's probably the computer. I think it's 25. Look, I think you could not ask for more dovish comments from Powell this week. I think he knew that the market needed to hear something like that in order not to react negatively. We've obviously been pricing in significant decreases. And so he delivered, right? And he gave us a speech that said, yep, I'm there. I think, and even words like ensuring that inflation is anchored, it was not only a dovish speech, it was sort of a victory lap, right? For him to say, hey, our monetary policy worked out, we've tamed inflation, now it's time to turn to unemployment, and we are going to cut. But I don't think that means, all that excitement means that we're necessarily getting 50. I think it's his way of saying, yes, we can all breathe a sigh of relief. I think he still gives himself the 25 in September.
Hey, Dana, just looking at the price action today, the Russell is up 3.3% versus a 1% for the S&P 500. So I guess that rotation trade into maybe smaller mid-cap stocks out of, some of the other big-cap names, maybe that's really a thing. How do you guys think about that?
Yeah, look, obviously small caps more interest rate sensitive, and this is great news. And certainly as you go into an interest rate reducing cycle, you're looking at benefits to small caps. You're looking at benefits, obviously, in the real estate sector, already somewhat expecting that and pricing that in. So not surprising to see that. And then you mentioned even in your intro, but what is the reason we expect the cuts? I think if you think that cuts are happening because, the Fed is a little bit worried about what's going on in the economy, that's not good news for small caps, right? It's short-term good news, but it's not good news, if you think you're looking at recession. If you think that the Fed is playing this right, they're hitting the ball right down the middle, they've tamed inflation, and now they're going to prevent problems in the economy, great news for small caps.
I guess the question, though, becomes, do they wind up cutting because there is a recession? And that's kind of the unknowable, because if they're cutting for that elusive soft landing or normalization, shouldn't that be a different distribution of investment than if you are cutting because things are bad?
Yes, it would be. Look, high level, we advocate strategic, long-term, diversified thinking. Don't try to time this. That said, if you're thinking about tilting in a certain direction based on one of those outcomes or the other, if you think recession's coming, you're tilting towards quality, right? You're tilting towards low volatility stocks that sort of act as a ballast in bad weather. If you think that the Fed is getting this right, that they are cutting in time, that they're not late with this, that they're pivoting at exactly the right moment, that we are going to avert, a problem with this. The AI trade, maybe your thesis is the AI trade is, full steam ahead, and we're even going to start to see productivity increases in the rest of the economy. Then, areas like small and value where they've been kind of ignored from a valuation perspective, they look a lot more attractive. You're going to be leaning more heavily there.
All right, Dana, so today's price action shows us that obviously the Fed still matters. The market cares what the Fed's going to do, but so do earnings. And we just kind of finished up an earnings cycle here. Any takeaways for you that maybe influence the way you're thinking about opportunities?
Yeah, look, earnings are cooperating, right? Earnings are in the plus category here. We've had a nice earnings season. Combined S&P 500 earnings grew nearly 11% year over year at this point. We do have NVIDIA still to see, obviously, the AI king. We want to see where that's going to go. That's going to be meaningful for the market, potentially even on the same level as today, right? To the extent that AI has been driving a lot of the market's valuation increases, the multiples that we're seeing in a big, that big tech-heavy concentrated part of the market, communications and tech. So that's going to be very important. But certainly what's nice to see about, earnings right now is that with nearly 80% of the companies beating their expectations and most of the sectors doing well, sectors like financials, this is good. It shows breadth, right? It's not just earnings coming from that concentrated part of the market that's highly valued.
So I'm glad you brought that up because I feel like I've been asking this question ad nauseum, which is NVIDIA going to be a market event or is it going to be a Mag 7 / chip stock event? Where do you fall on that?
I think it's going to matter, because of course we already do have the news now from Powell. And obviously, notwithstanding, we've got a month before these cuts actually take place, and that's a lot of time for data to shift one way or the other. But it's pretty well baked in that, we get the 25 in September. So the market's pricing that in. And now the question does become, where goes NVIDIA has gone, to a certain extent, belief in the AI trade. Of course, we know that there's a whole, satellite system of companies around there that are AI driven and, carry the flag for AI. But let's face it, NVIDIA is the market sort of bellwether for that. And I think that does matter a lot. Because again, a lot of the valuation increases we see on the large cap side in that growth space are around this thesis.
Dana, on the fixed income side, where do you see opportunity?
Of course, obviously, the expectation now with the Fed decreasing rates, and you start to see some movement there. I am and remain, a candidate for just diversity across the yield curve. I don't think it's smart for the average person to be betting on interest rate cuts. I think, the market is pricing in the interest rate cuts as quickly as they're pricing in, equity changes. So if you're in the retail advisor area where we exist, tilting one way or the other on interest rates is a tough thing to do. It's not just the Fed. When you think of something like the 10-year rate, which obviously we're all watching now, there's a lot that goes into that rate. It's not just the Fed. It's the market's expectations about where the economy is going. How much growth are we going to see in the midterm? So I say, make sure you're diversified across the yield curve. I don't even think a barbell. I think, trying to get across the yield curve is the right place to be.
All right, Dana, we really appreciate it. Thanks for jumping on this Friday. And next week, definitely going to be a busy week as well. Dana D'Auria, a co-chief investment officer at Envestnet, joining us from Connecticut. And I should point out the S&P is now up 0.9%. It was a little choppy there at around 11 o'clock, but we got back up there. So definitely a solid move within this rally. Oh, no, this is us.
Yes,
this is us being
us.
awesome.
Okay.
Is that not what we thought before?
Yes, exactly.
Taking a look at the sectors that are on the move as well. You were looking at real estate, consumer discretionary, and materials and tech sort of all doing well. Consumer staples, though, a little bit softer, off by 0.1%.
Well, the good news is Carol Master is back next week, so she can break those earnings when they hit.
Yeah, I'm not here that day.
I know.
You're all on your own, man.
We'll deal with it. Lisa Mateo and I will figure things out.
I haven't reached the moment where I don't do vacations for company earnings yet. I feel like maybe that's wrong, but I don't do that. So there is that. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. More self-driving vehicles could be hitting the road. Uber says it plans to offer autonomous General Motors Cruise cars to customers next year. Now, Cruise has been trying to rebuild business after mishandling that collision with a pedestrian. Uber shares, they're up about 0.6%. A change in leadership over at Nestle. The company has announced its CEO, Mark Schneider, is being replaced after 8 years running the company. Now, Nestle's Latin America chief, Laurent Frex, will take over next month. Shares in Switzerland right now, they're up about 0.1%. And the drama continues at Paramount Global. Sources say Skydance Media has accused the company of breaching their merger terms by pursuing another deal with Edgar Bronfman Jr. Paramount shares, they're up about 0.2%. All right, to earnings we go. Shares of discount retailer Ross Stores, they're higher after it opened its books. Bloomberg's Kriti Gupta reports.
A pretty big good earnings beat, a pretty big forecast beat as well. They're talking as well about improving margins. At least that seems to be where a lot of the analyst commentary is focused in on, and a couple of price upgrades as well.
Now, Ross Stores up nearly 2%. Executives at Workday, they say the company will sharply increase profitability over the next 3 years, and that news has shares higher, up about 11%. Crocs getting a lift from the company's partnership with actress Sydney Sweeney. Investors hope it'll help attract more young customers and also bring some attention to its Hey Dude line of shoes. We have Crocs up about nearly 2%. To tech now, where the information is reporting Meta has canceled its high-end mixed reality headset. We have Meta shares a little changed right now. And finally, sticking with tech, NVIDIA's earnings next week. Shares right now up about 3.5%. This is as investors wait to see if AI, that tech rally really has more room to run. That is your company news at this hour. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. You made it to the end of the week. We made it through Jay Powell's speech. This is Bloomberg Intelligence Radio. I'm Alex Steele alongside Paul Sweeney. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. Also check us out on YouTube. Let's get you caught up now with Michael Barr with World and National News. Michael?
Thank you very much, Alex. Paul, Lisa. Vice President Kamala Harris urged Americans to seize a precious, fleeting opportunity to move beyond political divisions and the threat of Republican Donald Trump as she closed out the Democratic National Convention.
We will end America's housing shortage and protect Social Security and Medicare.
Donald Trump responded on social media insisting that Harris is all talk and no action. The U.S. Secret Service has reportedly placed multiple agents on leave, including the head of the agency's Pittsburgh field office, as a result of its investigation into the assassination attempt on former President Trump. CBS is reporting the investigation by USSS, the Internal Affairs, is continuing. With the DNC in the rearview mirror now, attention now shifts to Arizona. Independent presidential candidate Robert F. Kennedy Jr. withdrew from the ballot in the state. Donald Trump says he would be open to Kennedy playing a role in his administration if he drops out of the race and endorses him. Kennedy is expected to make an announcement about his future later today. We got reaction from Terry Haynes, founder of Pangea Policy.
I think it matters less than most people think. I think the withdrawal impact of RFK Jr. really is almost nil. Kennedy's numbers have been falling through the floor. They're down to roughly 4% nationally. Some RFK Jr. supporters probably have already gone to Harris. Others might stick to Trump.
Terry Haynes of Pangea Policy. Finally, beware of this watermelon man. A truck at the U.S.-Mexico border in California was supposed to be watermelons, but it turns out some melons were disguised and it was really methamphetamine. The truck was seized at the border crossing in San Diego. U.S. Customs and Border Protection says the drugs had a value of more than $5 million. Among the real watermelons, officers found more than 1,200 packages wrapped in paper colored to look like watermelon skins. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex and Paul.
All right, Michael Barr, thank you so much. We appreciate it. All right, I am not necessarily a coffee drinker, but this story got my attention. The world's growing love for instant coffee, which I have to stop right there. I didn't know there was a growing love for instant coffee, is keeping roasters reliant on the Robusta variety once snubbed by Java snobs, even as prices reach the highest in about half a century. The convenience of instant coffee won over consumers during the pandemic lockdowns, leading to a surge in demand. While growth has since subsided as people start returning to offices and coffee shops, the public that was conquered remains there. So go figure. I mean, I don't know anybody, I don't think, that drinks instant coffee.
So funnily enough, Robusta gives like that fuller body but bitter taste thing.
Okay.
And then Arabica beans are the ones like a Starbucks would
Arabica,
use.
yes.
And there's different levels of Arabica beans. Some are super, super fancy and expensive, and then some are a little less good in quality. And then as Robusta gets too high, those prices, you'd naturally move to Arabica lower quality beans. But if that doesn't happen, that could be all over the place.
And apparently there's a real issue of the price of coffee going up in general.
Exactly.
Because Vietnam apparently is the big place where they grow coffee beans, and they've had some problems there, some ongoing droughts in Vietnam. And now Brazil and other parts of the world are trying to fill the void, but with not much luck.
Now, non-coffee snobs like Paul
Yes.
will thumb his nose
Yes.
up at instant coffee. However, some companies are trying to improve that quality and flavor of Robusta through cultivation and harvesting practices like hand-picking coffee cherries only at peak ripeness.
Okay.
The things you learn, the things we bring you on this show,
Well, here's
guys.
something, though, that I do know.
Yes.
It's in our household. Bottled, ready-to-drink coffee.
It's not my thing.
Yeah, I know.
I don't
know.
understand that. But is it good? Like, do we like this?
It's not me, but apparently it's good, and
Okay.
it's a thing. It's not cheap either. I was just looking. But
Yeah,
anyway.
no, not cheap at all.
That's our coffee talk.
That's our coffee talk. All right. And by the way, guys, if you're listening in Boston, our new home is starting September 3rd, right after Labor Day, 929 FM. Check us out there.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The party is over. The rousing speeches, musical performances, and celebrity cameos are being swept up with the confetti. What's next for Democratic presidential nominee Kamala Harris? Can she convert the party joy into votes in just 74 days? And the Supreme Court splits on Arizona's voting laws. But first, I'm June Grasso, sitting in for Joe Matthew. But first, let's take a look at what's happening in the markets. Here's Amy Morris. Amy.
All right, thank you, June. Fed Chair Jay Powell says the time has come for the Federal Reserve to cut its key rates, and the markets are responding as we check these markets for you all day long. Here at Bloomberg, the S&P 500 up 33 points. That's about 0.6%. NASDAQ gaining 0.8%, or 154 points, and the Dow is up 0.7%, or 282 points. The 10-year Treasury yield at 3.81%. The 2-year yield at 3.92%. NYMEX crude oil is up 2%, or $1.75, now at $74.77 a barrel. And COMEX gold up 1%, or $27.70, now at $25.44 per ounce. Also, new home sales for July. America's property market on a seesaw. July new home sales far exceeding Wall Street estimates. We get those details with Bloomberg's Vinny Del Giudice.
Sales of new single-family homes bounced back last month, reaching the highest since May 2023. The government's data imply buyers took advantage of lower loan costs. There were also more homes to choose from, and the median sales price declined, though it remains above $400,000. Looking ahead, the property market could post further gains this year, with Federal Reserve Chair Jerome Powell now saying the time has come to cut interest rates. Vinny Del Giudice, Bloomberg Radio.
And that's a Bloomberg Business Flash. Now back to Balance of Power with June Grasso.
Thank you so much, Amy. In her convention speech last night, Vice President Kamala Harris argued that her personal story and background as a prosecutor made her uniquely qualified to protect America's interests against a former president who only has his own interests in mind. Here she is.
And to be clear, my entire career, I've only had one client, the people. And so, on behalf of the people, on behalf of every American, regardless of party, race, gender, or the language your grandmother speaks. On behalf of my mother and everyone who has ever set out on their own unlikely journey, on behalf of Americans like the people I grew up with, people who work hard, chase their dreams, and look out for one another, on behalf of everyone whose story could only be written in the greatest nation on earth, I accept your nomination to be President of the United States of America.
Joining us now is Anne-Marie Hordern, Bloomberg chief political correspondent, who was on the floor last night during that speech. Anne-Marie, Harris introduced herself. Tell us about the high points and the low points, I guess.
Yeah, a reintroduction of the vice president, trying to get America to become more comfortable with her at the top of the tippet, understand her a little bit more. She started talking about, as well as her childhood, as well as being a prosecutor, say she always worked for the people. And then when it comes to policy, it wasn't so much a continuation of Biden-Harris. It was really Kamala Harris, you can tell, cherry picking what she liked working with Biden over the past 3.5 years and what she wants to signal to the American public that potentially could be part of her policy proposal. She talked about not raising taxes on the middle class. She talked about standing strong for NATO and Ukraine. She really leaned into reproductive rights. I think that's one area where she goes a little bit more in depth than we have seen Joe Biden talk about abortion and women's reproductive rights. And then when it came to immigration, given the fact that we also had the former president yesterday at the southern border, she talked about the bipartisan immigration bill that you had Senator Murphy from Connecticut and Senator James Lankford from Oklahoma work on, that President Trump told Republicans now would not be a good time for that. It seemed like Republicans really wanted that issue for the election. And I spoke to someone this morning from Wolf Research, Tobin Marcus, and what he said the campaign is trying to do is have this idea of strategic ambiguity. Basically, talk about broadly policies and signal some of these populist policies to swing state voters, but not get down into the details. But potentially, the former president is really going to want to push her on some of these details of these policies. And the next big thing to watch in this election race is going to be September 10th, when Trump and Harris face off with each other for that first debate.
I like that strategic ambiguity. I'm going to use that in the future. So how much time will Harris and Trump be spending in the swing states? Is that where they're headed now?
Absolutely. You already have the former president. He spoke in Las Vegas earlier this morning. Remember, this is early June. He was talking about no tax on tips, a populist economic proposal that also Kamala Harris has since followed him. And then he's going to be in Arizona. And this is interesting today, June, because you have the former President Donald Trump in Glendale, Arizona, part of Maricopa County. And you also have RFK as well in Maricopa County, in Phoenix. And there is this speculation that RFK is going to officially drop out of the race. We heard from an Arizona state legislature talking about the fact that he has asked to be taken off the ballot in Arizona, and potentially he's going to endorse the former president. Whether or not that starts to shift some votes to the president's column, that remains to be seen, but that's something we should watch out for today.
So I know that there was this incredible enthusiasm at the DNC. You had the speeches and the musical performances and the cute little bits. Do they go away? Do the delegates go away from that convention with any kind of a work plan ahead of them?
Well, absolutely. There was a tremendous amount of energy reinfused into the Democratic Party. Remember, we cannot overstate how different this convention was last night than when Joe Biden was potentially at the top of the ticket. Kamala Harris has really been able to close that gap after his disastrous debate performance and then stepping aside. When the speech wrapped up, I was sitting near Senator Chuck Schumer, standing near the New York delegation, and he said it was pitch perfect, and he was dancing in the aisle. One thing, though, that I really took away from the speeches at this convention was that whether or not it's Michelle Obama, Barack Obama, or anyone else that got up there. What they wanted to make sure they told that packed convention center just behind me is the work is not done. Just because you're excited, the work is not done. I remember at one point, Obama was talking about the immigration deal that was scrapped in the Senate, and you heard a lot of boos. And he said, don't boo, vote. They don't want the Democratic Party to get complacent, because when you talk to pollsters, they say, this is going to be a nail biter. It is a coin toss.
And just briefly, the impact of RFK possibly leaving, would that be better for Trump or better for Harris?
It really depends who you ask. I think it'll be better for Trump because he was stealing from Trump votes. As a number of pollsters have put it to me today, including Tobin Marcus, that individual who talked to us about the strategic ambiguity with the Harris campaign. They say he was already polling for Trump, so potentially it can help Trump, but they don't think it's going to, be a massive endorsement. But what Trump needs to do, and a lot of pollsters I talked to about, is stay on policy. He wins in the polls when he talks about the economy and immigration, these top two issues. And then on top of that, try to win a news cycle. Because you had Biden dropping out at the end of the RNC, it was hard for Trump to maintain that news cycle bump because it was the Democrats in disarray trying to figure out who was going to be on the top of the ticket, and they've been able to hold that news cycle. But now, coming in after Labor Day, a lot of individuals said to me, don't read any of the polls till after Labor Day. It's going to be a hard fight for both of these campaigns. And really what a lot of people, pollsters tell me that it comes down to is they want to hear more about details and policies.
Thanks so much, Anne-Marie. We'll talk to you later. That's Anne-Marie Hordern. She's coming to us from the site of the DNC. Right now, we're going to go to a special conversation with Bloomberg TV host Lisa Abramowitz, live from Jackson Hole.
Welcome back. This is Lisa Abramowitz here in Jackson Hole at the confab of the Federal Reserve and central bankers from all over the world. The air is clearing a little bit as time goes on. We have with us someone from the other side of the Atlantic who I'm sure is watching the euro gain value versus the dollar rapidly with interest. Olli Rehn, governor of the Bank of Finland, former EU commissioner, a member of the ECB Governor Committee. Mr. Rehn, this to me was a seminal moment for the Federal Reserve, kicking off a rate-cutting cycle. You already did that. You got ahead of it. I guess I want to begin with, does anything that you heard here change your view about how quickly the ECB can go?
I think it has reinforced confidence to the disinflationary process globally. Of course, the United States and its economy is central in the world economy, and as Chair Powell was very clear that this is now the turning point in monetary policy, and he is convinced of inflation being tamed. So that is a very clear message also for us Europeans, even though we are not the 13th federal district of the U.S. Federal Reserve System.
I know, I've heard this before. People come on and they say, we watch it, but we're an independent group. That said, we had on earlier Mauro Centeno of the Portuguese Central Bank, and he was saying, September is an easy call. Do you agree?
A rate decision is never an easy call, but I think as we look at data for the moment, inflation is stabilizing in the long-term trend. I mean, there has been some, weaker data some time ago, but now we see more convincing data concerning wage growth. And we have to see the forest from the trees. The long trend in disinflation is on track. At the same time, the growth outlook in Europe, especially manufacturing, is rather subdued, weak. So in my eyes, this reinforces the case for a rate cut in September, provided that we see data that disinflation is indeed going to be on track.
There was a belief earlier this year that the ECB would cut rates more significantly than the Federal Reserve. Right now, it seems like that could be shifting, and actually the Fed could be on course to cut rates more significantly than the ECB. Do you think that that's right? Do you think that given the fact that Europe and central bankers are more concerned about weakness, particularly in the biggest economy in the region, than in the U.S., does it make sense to you that the ECB should be cutting less than the Fed?
2 points on this. First of all, we've seen that inflation, especially in this cycle, has been a global phenomenon. It rose globally, and it has been contained globally. And now it is therefore no surprise that it is we are seeing a very synchronized reaction from the Fed, from the ECB, and from the other major central banks. The second point is that we have certain differences in the economic context between the US and Europe. In Europe, growth outlook is looking somewhat weaker than in the US. But nevertheless, there is plenty of similarities because of this disinflationary process now going on, and we both take our decisions on the basis of our mandate and on the basis of the economic data concerning our jurisdiction.
So we'll see. We'll see how it goes, essentially, right?
Well, we'll see, but we have already plenty of data to kind of prepare for our decision in September.
So there is this sort of expectation baked into markets that the terminal rate in Europe is going to be about 2.5%. One of the big questions we've had is, what is the ultimate destination for this cycle that we are embarking on, maybe globally? Do you think that's appropriate, 2.5%?
There has been some fluctuation in this assessment of the market data concerning the terminal rate of this rate-cutting cycle. That's understandable because there is so much uncertainty, not least because of geopolitics in the Middle East, Russia's illegal war in Ukraine, and also because we are still seeing relatively strong service inflation, for instance, in Europe. So I think the conclusion of this is that we indeed have to have the big picture in mind. And for me, seeing forest from the trees means that the disinflationary process has been going on since fall 22, and it is still going on. And now it's a question of with which kind of speed do we cut rates so that it takes into account that we have to preserve price stability. That's our main mandate. And at the same time, we take other considerations like the growth outlook into consideration.
Would you consider a 50 basis point rate cut?
Pardon me?
Would you consider a 50 basis point rate cut?
We have to always be open as regards what kind of rate cut or rate decision we do. But I don't want to commit myself at this stage. What we do is we take decisions on the basis of data dependence. That does not mean data point dependence, but the longer-term trend. And we focus particularly on three things, three issues. One is the inflation outlook. The second is the underlying inflation neutralized from volatile energy and food prices. And third, the strength of monetary policy transition.
Right now, we're seeing the euro strengthen. Earlier today, strengthened to the strongest versus the dollar going back to July of last year. Is that a good thing or a bad thing from your point of view?
For us, exchange rate is not a policy target. Yes, it has indirect consequences, indirect impact on inflation in the medium term, but we don't particularly target the interest rate. So our mandate is really price stability in the Eurozone, in the Euro area, and that's what we are focused on. That's the essential thing.
Olli Rehn, thank you so much for being with us. Olli Rehn was the Governing Council member and a Bank of Finland governor, also a former EU commissioner. Thank you so much for being here with us. From a beautiful Jackson Hole, Wyoming, thank you so much. This is Bloomberg.
And thank you, Lisa, for that interview with Olli Rehn, Bank of Finland governor, who said that the downtrend in inflation is on track and that disinflation and the weak economy support a September cut. Coming up on Balance of Power, we're going to talk with Terry Haynes, the founder of Pangea Policy, to get his take on the Harris speech and the state of the election. But first, a look at what's happening in the markets. Here's Amy Morris. Amy.
All right, thank you, June. It is It's 12:17 on Wall Street. I am Amy Morris. Fed Chair Jay Powell says the time has come for the Federal Reserve to cut its key policy rate. He was speaking in Jackson Hole today. He affirmed expectations that officials will begin lowering borrowing costs next month, making it clear his intention to prevent further cooling in the labor market.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Fed chief also acknowledged recent progress on inflation, which has resumed moderating in recent months after stalling earlier this year. He said his confidence has grown that inflation is on a sustainable path back to the 2%, referring to the central bank's inflation target. We check markets for you all day long at Bloomberg. Markets, of course, responding to all of this. S&P 500 up 0.5% or 29 points. NASDAQ up 0.8% now, or 138 points. And the Dow is up 0.5% or 229 points. The 10-year Treasury yield at 3.8% and the 2-year yield at 3.92%. New home sales in the U.S. bounced back to the highest level since May of 2023 as buyers took advantage of lower mortgage rates and more listings to choose from. Contract signings on new single-family homes increased 10.6% last month to a 739,000 annual rate. That's according to today's government data, the pace beating all estimates in a Bloomberg survey of economists. And Meta has reportedly canceled its high-end mixed reality headset. The Information quotes two unnamed workers at Meta who say the company pulled the plug on the device this week after a product review meeting attended by CEO Mark Zuckerberg and other Meta executives. Meta platform shares now down 0.4%. That is a Bloomberg Business Flash. Now back to Balance of Power with June Grasso.
Thank you, Amy. Democrats are riding high on their star-studded convention. The momentum is there, but now the fundamental challenge of trying to get voters to come to the polls in only about 74 days. Joining me now is Terry Haynes, founder of Pangea Policy. Terry, you're giving Harris a 60% chance of winning after that speech. Tell us why.
Well, I've had her at 60% for a couple of weeks now, June, and it's a variety of things. But let me tick off where she is. Where she is she's got a unified party, and she's got a strong appeal to independence, particularly with social issues, and fear and loathing of Trump, which never should be, always should be put into the mix. Trump, on the other hand, still has a split party. He doesn't have a unified party. It's important to remember that the Trump base is not all Republicans, and that accounts for some of the outreach that was done this week by the Democrats to try to attract those disaffected Republicans over towards Harris. Plus, you've got a situation where there's no obvious appeal to independence. And on top of that, Trump and Vance have basically wasted 30 days, not able to define Harris before she started to define herself, putting them on a defensive. And you've got a situation where you've got the next big bump in the road, as Anne Marie said a minute ago, is the September 10th debate. And there's early voting that starts pretty quickly after that. So we are all of a sudden very much in the home stretch here. And I think that Harris, with all those, plus the idea that there will be strong get out the vote efforts and message discipline, I think is probably enough to carry her over the top, barely.
So Harris, because of the compressed time frame here, hasn't had to endure the barrage of attacks that other presidential candidates or nominees have usually gotten in this late stage of the game. I saw a Republican commercial last night about the economy that had clips of Harris saying, talking up Bidenomics. Where do you expect their main attack to be coming up after the convention?
Oh, I think they go hard on economics and they go hard on the border. Those are really the top two issues. And, but they need to be very focused about those. They need to detail the failures of the Biden-Harris administration, and then they need to talk about what they would do in a realistic sort of way. I mean, you can't criticize one side for doing nothing, and then the other side, and then on your own side, you put together solutions that really have no chance of working well, like Trump's deportation for tariffs sorts of solutions. Very much, again, something that attracts base, but doesn't unify the party, doesn't push buttons on independence, and the time's really running out for Trump to do that.
As far as the immigration issue, last night in her speech, she talked about, as you mentioned, the fact that Donald Trump was against having the immigration deal that was supported by conservative Republicans because he wanted it as a campaign issue. Is that enough? That seems to be what Democrats are saying over and over again. But is that enough to answer the border issue?
Not on its own, but she needs to talk a little bit more about exactly how she would continue to enforce border security and border discipline. I don't suggest that she get into a huge amount of detail on this. Strategic ambiguity may be new to policy nerds in Washington, but it's not new in politics, and you don't want to get too much down in the weeds because that just accelerates an attack on your fundamental position, and voters don't want to hear it. They want to hear that you're going to do something. So Harris is going to need to talk a little bit more about what she will actually do, but ever since the Republicans, somewhat at Trump's behest, stopped the bipartisan border deal in the late winter, they've been vulnerable to this attack, and they're going to reap the whirlwind on it, I'm afraid.
So how does Harris, use the good parts of Biden's administration, which she had touted some last night, but stay away from the bad parts? So how does she divorce herself from some but not others?
Well, she talks about the things that matter most to swing voters and in swing states, undecided voters. That's really where her message is going to be and where the message discipline is going to be. The rest of it, I think you saw from the speech, is going to be largely continuation policy. And to me, the big news in the speech last night on a policy level was the strong support for in continuation of foreign policy, which happens to be the most bipartisan issue set that exists in Washington. So, she's going to be strong on the border. She's going to be stronger on police and a little bit more on law and order. Fundamentally, she doesn't talk about the differences between Biden-Harris and Harris-Walz. What she's just going to do is go forward and talk about Harris-Walz.
So you mentioned foreign policy, and Gaza has been the one thing that seems to be separating Democrats in some respects. The protesters that were there, they seem to have handled that. It didn't spill over into the convention too much. How do you think she handled the Gaza, trying to sort of split the difference?
Well, her speech, I thought, was pretty deft about that. She was, fully supportive of Israel, and at the same time, understood that there's suffering on both sides, and that her policy, just like the current administration's policy, would be to see that conflict end to the extent it's possible. And there's not a lot of desire, certainly by Hamas and those who started this conflict to want to end it. So, this is going to continue on for a while. And I'd say parenthetically that geopolitical concerns are probably the biggest unknowns, the biggest risk factors in Harris's campaign. But she'll continue kind of the either or on that a little bit, with the hope that in the swing states where it matters, Michigan, for example, Minnesota possibly, although that's less of a swing state, the situation is going to be, you've got the individual campaigns in those states that are going to be responsible for working with disaffected, those who are disaffected by Democratic policy, and working to get them out to the polls, and frankly, not being folks who are going to stay away.
So Harris, we've had this for quite a while, this anyone but Trump or Biden kind of electorate. Is she going to be able to capture those people? What does she have to do to make sure that she's the one that they'll choose in the swing states in particular?
Well, she needs to be, she's a fresh face, and she needs to continue being the fresh face and continue along those lines. I mean, she needed to do two things last night just to start out. One, she needed to disparage Trump, and she did that pretty well, prosecuted that very well, as lots of people now will say. And secondly, she had to make sure that, people felt that that her candidacy is a big tent. The new thing is a big tent, and they can come forward and feel positive and understand that there will be energy in a Harris presidency that will try their best to deal with their problems, concerns, and needs as citizens. And she'll continue to do that. And she doesn't need a lot of detail in order to do that. She needs to be continue to need to be the new face. When I wrote about the speech last night, I called it the Joyful Functioning Adults 2024 campaign. You'll remember those bumper stickers that have been around for a while saying any functioning adult in 2020 or 2024. That's an embodiment of the double haters, which people didn't want Biden or Trump. That's now gone away. Harris is a fresh face as a result. I would broadly look at this as very similar to what's gone on in the UK elections, where after a decade or so of the same old on both sides, Labor offered a fresh alternative and a fresh start without a lot of detail, and that was enough to carry them to victory. I think something similar is probably going on here.
So how important is it that the Democrats showcase some Republicans who have turned against Donald Trump? Last night it was former Representative Adam Kinzinger, and we had the former Attorney General of Georgia talking about how, it's not about Republican or Democrat, it's about voting for democracy and how important this election is. I mean, is that important to those watching?
One of the things that I've always said about this election, I mean, going back to January, the beginning of the voting, is that one big reason why Republicans are split is that you have a situation where, in the early primary season, when it was the most contested, you had 40% of Republicans who did not vote for Trump. You had a situation where the Trump base was no bigger in 2024 than it was in 2020. And there's a situation where you've got half of the Trump cabinet and a variety of other senior officials who are, let's say charitably, even people like Haley are not exactly foursquare working their hardest to get Trump elected. So you've got a split party anyway. It's less important that was done during the Democratic convention, although you'd expect Democrats to do it. Much more important that in what you see in the next 2 months, which is a lot of those cabinet officials, a lot of senior Republicans, a lot of influencers politically, say you really shouldn't be voting for Trump. That's really not a good idea. That'll keep the party split, and frankly makes Trump's job harder. And it affects independents too.
Do you think that the main message going forward is not Trump, I'm not Trump, or is the main message her, message on abortion, which was pretty clear during this convention, or gun violence? Where do you think she goes, or is it a split screen?
Well, it's very much a split screen, and the split screen, I think, is one. I mean, there's a lot of Trump hate, Trump disdain among Democrats, and frankly among independents too. And I'll get back to that in a second. But the other half is what she wants to do is put an optimistic face on things, generally speaking. And one of the things that the optimistic face is put on is preserving freedoms, and particularly on social issues, and preserving and expanding freedoms. And she'll continue to look at it in that context. One thing, June, that I think a lot of pollsters and pundits really miss, though, and this goes back to when before the first debate, when Biden was still in the race and thought to be competitive, is that disaffected voters, people who were uncertain about for whom they were going to vote, if they thought well of Biden's presidency, they were 28% more likely to vote for Biden than Trump. If they didn't think that much of Biden's presidency, if they were somewhat disaffected and negative about Biden's presidency himself, nonetheless, those voters were 77% more likely to go for Biden over Trump. There is an awful lot of resistance to voting for Trump among independent and uncertain voters. And I think that's likely to continue. That's one thing that the whole vibes of the convention was really about, trying to convince those voters that Harris is a safe pair of hands, and that they're going to be respected, and their concerns are going to be heard if they vote for Harris. So, they will keep hammering that message in, and I expect it to have some good effect.
There was an attack on, or sort of illuminating what Project 2025 is all about during this convention. And during her speech, Harris said they are out of their minds. At the same time, Trump was on his Truth Social saying, I have nothing to do with Project 2025. How much do you think the Democrats are going to, or should, keep pushing Project 2025? Because it is long. I doubt anyone's going to read it. They're going to be hearing, the highlights of what it's about. It is a scary document if you look at it from the viewpoint of democracy.
I will say I've been in Washington a long time, and in a variety of different places, politically and policy and everywhere else. And I've talked to a lot of my Democratic friends, and I cannot for the life of me figure out why they think Project 2025 is such a hot button. One thing that the former Republican House leader Dick Armey likes to say always is, if they're accusing us of doing it, you can bet they're doing it. It's been a very long time. Every one of these think tanks, liberal, conservative, in between, has documents that they put together as policy recommendations for the new administration. Heritage has been doing this since about 1976, if I recall correctly. It's been since about 1984, 1988 that it was really taken hugely seriously in Washington. But everything that goes on at Heritage on Project 2025 goes on at Brookings.
We have to end it there, Terry. I'm so sorry, but thank you so much for your interview comments. Terry Haynes, Pangea Policy founder. Coming up next, we're going to be talking about the Supreme Court splitting its decision on Arizona voting laws. This is Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. Fed Chair Jay Powell says the time has come for the Federal Reserve to cut its key policy rate. The Fed chief also acknowledged recent progress on inflation, which has resumed moderating in recent months after stalling earlier in the year.
After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%.
Speaking in Jackson Hole today, Powell affirmed expectations that officials will begin lowering borrowing costs next month. Reaction on Wall Street, stocks are higher, bonds are lower, and we check the markets for you all day long here at Bloomberg. The S&P 500 is up 0.5% or 31 points. NASDAQ up 0.8% or 149 points. And the Dow is up 0.5% or 228 points. The 10-year Treasury yield at 3.82%, and now the 2-year yield is at 3.94%. Former St. Louis Fed President James Bullard says the Fed's gone a long way to achieving a soft landing for the economy.
It was not quite a victory lap, but certainly emphasizing that this policy since 2022 has been extremely effective in bringing inflation down substantially, putting us on a path to 2% inflation without substantial weakening in the labor market.
Former St. Louis Fed Chief Jim Bullard joining Bloomberg Surveillance from Jackson Hole, Wyoming. And that's a Bloomberg Business Flash. Now back to Balance of Power with June Grasso.
Thank you, Amy. That's Amy Morris. Yesterday, a divided Supreme Court decided to allow Arizona Republicans to enforce the part of a state law that requires people registering to vote before the election to show proof of citizenship, but refused to allow the state to enforce another part of the law that would have prevented Arizonans from voting in presidential races or by mail if they used a federally provided form to register without giving proof of citizenship. If this sounds confusing, it's because it is. Here to help us understand it is elections law expert Derek Muller, a professor at Notre Dame Law School. Derek, I think we start with the proposition or explaining how Arizona seems to have two different ways of or rules for voting, federal versus state.
Yeah, so this stretches back several years, and actually going back really to 2004 or 2000 when Arizona enacted Prop 200 about citizenship rules in the state. And you can see that Arizona now has a two-track process for registration. So one are a group of voters who are called federal-only voters. Those are individuals who use the federally approved voter registration form that's promulgated pursuant to federal law. And if you complete that form, which doesn't require proof of citizenship, you are eligible to vote in federal elections. But if you are unable to prove citizenship, but if you are able to prove citizenship and use the state form or attach proof of citizenship to the federal form, you can vote in all the elections, both federal and state. This is a class right now of about 35,000 voters in the state of Arizona that are being fought over. And right now, I mean, after all the confusion, it's really the status quo of what's been happening in Arizona for a little while now.
So the Supreme Court was split 5-4. Did they sort of give and take, split the baby, if you have it, where they gave part of what the Republicans wanted in the new law, and they took part away? I mean, how do you read it? Because there is no real decision because it was a per curiam. I think it was a page and a half.
Right. Yeah, I mean, so it was really 5-4 to allow this provision, this sort of two-track process to play out. So if you can't prove your citizenship, you can still vote in the congressional elections, the presidential elections. You just can't vote in the state elections. But then there was a different majority that was a 6-3 majority that says, no, actually, these other provisions are also going to be stayed. We're going to affirm the stay. We're not going to have a split system for dealing with presidential elections. We're not going to require those who are unable to prove citizenship to come and vote in person. 3 justices would have allowed all of these provisions to take effect. 6 of them said that those 2 couldn't take effect, but you had a majority allowing one track of this take effect. So the court comes without any reasons on this. It's a very truncated briefing schedule. They're just trying to issue an order that provides some guidance for election administration officials. Whether or not they give reasons in the future is a matter for another day.
So the 3 justices who were in dissent there, who would have allowed everything to happen that the RNC wanted, were, no surprise, Justices Clarence Thomas, Sam Alito, and Neil Gorsuch. What happened to the so-called Purcell principle, where the Supreme Court said we don't make changes too close to an election because it's too confusing for people. I mean, this is very close to an election.
Yeah, I mean, the problem is, like, where do you measure when the change happens? So this lawsuit was first filed in 2022. So this has been on the books for a while now that Arizona's had this law in place. It was in May that a federal court issued an injunction prohibiting any of these provisions from taking effect. So on the one hand, you could say all of them were in effect for a couple of years up until May, and is May too close in time to the election? Then a federal judge holds all of them. It goes on appeal to the Ninth Circuit. The Ninth Circuit says no, one of these provisions, that one that allows federal-only voters, can go into effect. The others are going to be stayed. That's the majority of the Supreme Court's view. One goes into effect, the others are going to be stayed. But then there's another court of appeals later that comes on and says, no, we're going to stay all of them. So depending on where you look, right, each court decision is always later than the last one. It's always coming after the fact. So Purcell is guidance to the courts, don't change the rules too close to the election. But the Supreme Court has to be able to weigh in and say, no, you court changed the rules too close to the election. So we're changing the change, which creates a little bit of difficulty if you're an election administrator. There's no question about it.
So there's been a lot of talk about Amy Coney Barrett and how during the term she sometimes strayed from the conservative majority, at least in her concurrences, if not in the way she voted. And the 4 justices who would have rejected the RNC request were the liberal justices, Sonia Sotomayor, Elena Kagan, and Ketanji Brown Jackson, and Amy Coney Barrett, all the women on the court. What do you make anything of Barrett being with the liberals on this?
So I don't make a whole lot about it at the moment. You can see that there's lots of different ways to slice this case in terms of the timing. Her vote, along with those other 3 justices, was a vote to say what the district court back in May, we're just going to preserve that universe. The district court decided it way back in May. When the Ninth Circuit started weighing in, it was July. It was much later. It didn't give reasons in July when it issued its first order, or it didn't give many reasons. So in a way, you could look at it and say, we're going to hold that thing in place. Now, these are all trade-offs, right? You can think about this likelihood of success on the merits. You can think about how close you are in time of the election, everything like that. But I think there's no question that these emergency cases we're increasingly seeing, they don't always translate to how the justices vote on the merits at the end of the day when it comes up properly presented before them.
Properly presented, not on the emergency docket. Thank you so much, Derek. That's Professor Derek Muller of Notre Dame Law School. So last night, Kamala Harris became the first Black woman and the person of South Asian descent to accept a major party's presidential nomination, and she'll become the first female president if elected. But Harris didn't explicitly reference the historic firsts in her speech.
I promise to be a president for all Americans. You can always trust me to put country above party and self, to hold sacred America's fundamental principles, from the rule of law to free and fair elections to the peaceful transfer of power.
Joining me now is Lisa Camuso-Miller, former RNC Communications Director and Republican strategist, and Brad Howard, Corcoran Street Group founder and Democratic strategist. Lisa, I'll start with you. A lot of anticipation for this speech, of course, as in any final convention speech. Do you think she struck the right tone between seriousness, between, her personal journey and political realities?
I do. June, the one thing that I take away from all of this week is that it's remarkable how the DNC has turned this entire narrative on its head and made it so that Donald Trump feels like the incumbent that they are fighting against, and really have sort of got him and the campaign on their heels really in a very big way. But the one other thing that strikes me that we can't lose sight of is that on and the Friday after the RNC, we also felt very much like Donald Trump had the wind in his sails. So there is a lot that goes along with the end of a convention, and the excitement now really comes to the part where there's a lot of work left to be done in order to make sure that the election is in fact free and fair and done in a way that it is crystal clear who the winner is, because that's the other thing that we have to keep in mind, is that there could very well be a lot of playing beyond the whistle.
Crystal clear might be difficult, Brad, because do you expect, as most people do, that this is going to be a very close election?
Oh, absolutely very close. And, I'll just remind our viewers that at the Republican convention, their numbers actually tanked because the American people started to get to know J.D. Vance and resoundingly rejected him with this bizarre, weird comments. And so his numbers actually went down. At this time, I think Kamala knocked it out of the park last night. I, for one, was really impressed by her foreign policy section of how tough she took it to Donald Trump about his willingness to want to placate to autocrats because he wants to be one. I thought that was a great line. I really kind of felt fired up in that moment by her. And throughout the speech, had been stuff I had heard before. I hadn't really heard her take on the foreign policy element, and I thought that was fantastic for her to do last night. But you're absolutely right. This is going to be a very close election. Democrats need to know that we can't win this election if the polls are 48-48 going into election day because of the Electoral College. We have a systemic inequity there that we have to hit 50, 51, even 52% to make this election that we can win the Electoral College. So we've got to run through the tape. I agree. There's going to be probably playing through the whistle. There's going to be legal counts. This race is going to be so close. We're going to have, poll counters on the ground telling people to go back in and check their votes, make sure the signatures match. It's going to be an all-out push. This election will not end November 5th. I can guarantee you that.
A lot of lawyers at work on both sides, I'm sure.
Absolutely.
So, Lisa, I keep hearing Trump has to stay on message. Trump has to stay on message. Do you think Trump can stay on message about the economy, about immigration?
No, I don't. And I think that, Brad's laughing because he knows that this is true. We're trying to apply old rules to a new dog. And this is a guy who has been around a long time, but he does not follow the rules the way traditional politics has run. So Donald Trump is going to do exactly what he wants to do. That's why he brought Corey Lewandowski back to be on the campaign, to let him do whatever the heck he wants. And that very well is the kind of wild card that the Democratic Party and everyone else really that is in this race right now has to keep in mind, is that Trump factor is really the unknown. If we continue to run a playbook from 5 and 10 and 12 years ago, we're not going to be seeing election results the way we ordinarily would have. So the Democrats are going to have to be smart and continue to offer up these very compelling stories, which they did. The DNC absolutely outperformed the RNC 1,000 times over. Hope and opportunity. I saw a lot of people really sort of walk away from this demonstration of a party that made people feel really good. There were Republicans I admire and respect, that were on the stage saying all of the things that people like myself really do believe, and that is that Republicans and Democrats are both very patriotic. And so this election is very much different in that we can say all we want about what Donald Trump has to do, but Donald Trump's going to Donald Trump, and that's the way it's going to go.
So, Brad, we hear a lot about what the DNC did right and the contrast between the two conventions, but tell me what they did wrong, what they left out, besides not having Beyonce last night, which everyone was, I was getting text after text, where is she? I'm still holding out hope that she'll be on.
No, look. Well, I think brevity is something the Democratic Party could really learn a lesson from. I love Bill Clinton to death. I'm from Arkansas. I could have been a little shorter. I think it kind of frustrates me when we go past the 11 o'clock hour because of the fact that you've got, viewers at home who probably want to go to bed, who also want to hear the messaging. So I want to be careful in those moments that we, can shorten our message. But, the joy in that, the Oprah speech was incredible when she was like, Kamala, it was just all around. And I think, to her point, too, I think when you look at Bill Clinton had a really good line. What he said is, don't count the number of lies, Donald Trump says, count the number of eyes. And when you look at, I think what Kamala learned from the Hillary campaign is, you're right, she did not mention the glass ceiling. She did not mention this is the first woman. She did not mention first Asian, Hispanic, or Asian, South Asian, Pacific. This was about you, the voter. This is about people. This is about the country. We need to heal. We need to move on. And I think Donald Trump's, his actions and his Trumpisms were fresh 10 years ago. They are stale now, and the American people are wanting something new right now, and Trump isn't offering that. He has a chance. he's a wild card. He can figure something out, and I think he will. I think he's going to do something to upend this race, and that's kind of why we got to stay on our toes as Democrats. But Trump and Biden represent this era of the past. Kamala's the only one talking about the future, and if she can continue to do that the way she's doing it, she's going to win in November.
Thank you both so much. A lot more to come, of course, 74 days. That's Brad Howard, Corcoran Street Group founder, and Lisa Camusa-Miller, former RNC Communications Director. You're listening to Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
The sprint to November starts now. Welcome to the fastest show in politics this day after the Democratic National Convention wrapped in Chicago, with battle lines now drawn by both parties. We're going to look ahead today, the rest of this campaign, with Congresswoman Robin Kelly of Illinois and with our political panel, Lisa Camuso-Miller, former RNC Communications Director, Republican strategist, joined today by Democratic strategist Brad Howard of the Corcoran Street Group. And it's all after a look at Wall Street. Let's get on the markets right now with Amy Morris. How's it looking?
All right, thank you, Joe. Fed Chair Jay Powell says the time has come for the Federal Reserve to cut its key rate, and the markets are responding. Stocks are higher, bond yields are lower. We check these markets for you all day long here at Bloomberg. The S&P 500 up 0.6%, rather, or 33 points. NASDAQ up 0.8%, or 143 points, and the Dow is up 0.6%, or 257 points. The 10-year Treasury yield at 3.81%, and the 2-year yield at 3.94%. Meta has reportedly canceled its high-end mixed reality headset. The information quotes two unnamed workers at Meta who say the company pulled the plug on the device this week after a product review meeting attended by CEO Mark Zuckerberg and other Meta executives. Shares of Meta now down about 1%. Sales of new single-family homes bounced back in July, advancing to the highest since May of 23. The data imply buyers took advantage of lower mortgage costs. There were also more homes on the market. And economists surveyed by Bloomberg anticipate a sharper slowdown in the labor market. They see the unemployment rate peaking at 4.4% by the end of this year and holding there through mid-2025. And that is a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Amy Morris, thank you so much. We've made our way back to Washington, flying essentially overnight from Chicago to bring you the latest here on Balance of Power, live from the nation's capital. Now that the DNC has wrapped, a lot to talk about. We're going to be joined live from Chicago by Anne-Marie Hordern, who is still with us, and an important conversation ahead with a lawmaker from Chicago. Robin Kelly, the Congresswoman from Illinois, will be here as well, as we try to distill everything that we heard over the last 4 nights in Chicago. An historic turn in a presidential campaign that came to fruition Monday night with the actual president, Joe Biden, speaking to delegates, running through Thursday when Kamala Harris made history as the first woman of color to accept a major political party's nomination. Let's walk you through the week.
It's been the honor of my lifetime to serve as your president. I love the job, but I love my country more.
We refused to give up on America. Millions marched, many ran for office. We kept our eyes on the future. Well, my friends, the future is here.
Here's a 78-year-old billionaire who has not stopped whining about his problems since he rode down his golden escalator 9 years ago.
I want to know, who's going to tell him that the job he's currently seeking might just be one of those black jobs? More than anything else, let us choose freedom. Why? Because that's the best of America. We're all Americans, and together, let's all choose Kamala Harris.
It's the fourth quarter. We're down a field goal, but we're on offense and we've got the ball. We're driving down the field. And boy, do we have the right team.
I accept your nomination to be President of the United States of America.
There you have it, as we brought you the sights and sounds from Chicago this week in a way that only Bloomberg can. And a special thanks to Bloomberg's broadcast technicians and the world-class team led by Steve Fosberg that helped us bring that story to you from Chicago here on Bloomberg TV and radio, on YouTube, and all the platforms that you count on, including our podcast. As I mentioned, we're going to bring you back to Chicago in a moment to talk with Bloomberg's Anne-Marie Hordern. But first, we want to bring in our panel for their thoughts coming off of last night and looking ahead now. We're trying to turn the page today on Bloomberg to get a sense of what the coming weeks are going to look like here. Not just the debate, but the fight for money, the deployment of resources, in the final sprint to November. Lisa Camuso-Miller is with us, former RNC Communications Director, host of the Friday Reporter podcast, Republican strategist alongside Democratic strategist Brad Howard, Corcoran Street Group, where he is founder. Great to see both of you here. Brad, I'll start with you. Coming off of a big night here in Chicago, a lot of folks seem to think Kamala Harris closed the deal in her connecting with delegates in the room. She did make it in prime time, which was the first time we saw that happen for the headliner all week. But how did she connect with Americans who were undecided, watching at home in their living rooms?
Like, I was in the arena last night, and man, that was quite some energy. You know, and I think the lead up to her speech was, you know, very much a targeted message to those kind of disenfranchised globalist Republicans, to those undecided voters that may have some concerns about her and her leadership, to see a litany of people who wore the uniform pointing to her and saying she can be our commander in chief. We trust her with the nuclear launch codes and to lead us in a very complicated foreign policy world right now. I thought that was extremely powerful. And I think you're going to see, I mean, you saw Adam Kinzinger, who was a Republican. You know, I was chief of staff to Congresswoman Stephanie Murphy. He was on the January 6th commission with her. He's a noble leader. He's a patriot. He's a veteran who served this country honorably. To have him get up there and put his arm around Kamala Harris and Tim Walz and say, you know, this is a party that is inclusive and stands for America and is a patriotic party and is not everything you hear from Donald Trump. I thought that was a very powerful moment as well.
Mm-hmm. All right, Lisa, as the Republican, give us your view here. Looking down the chute to November, what is the job for Donald Trump?
Well, Joe, I mean, the one thing I think that we discussed a little bit earlier in the previous hour was that this also, too, is a word of caution, that the Republicans actually came out of their convention feeling very positive and very motivated and very excited about the messages that were coming out of there. And then, of course, there's the reality, right? There's the getting on the road. There's the meeting the election, all of the election obstacles that they have to lead and meet. And this is going to be difficult. It's one of those things where they're riding high off the DNC, the Democrats, and it was an incredibly powerful convention. So please don't let that be lost on my words. But what I'm saying now is that we have a lot of obstacles to get through and to get to before we get to Election Day. And so they will have to be very disciplined. What Donald Trump has to do is he's going to do whatever he wants, Joe. So we're going to just follow and watch along. But more than anything, he's going to have to now pick apart very carefully all of those themes and those messages that were shared from the DNC that really resonated with those voters that were undecided before Monday of this week and try to win them back, because I really think that the tone and the tenor that came out of the DNC was positive and hopeful and forward-looking, and that's quite the opposite of what we heard from the RNC.
Clutch take from our panel. Lisa and Brad will stay with us for the balance of the hour here. Let's go to Chicago right now and gauge the political hangover with Bloomberg's Anne-Marie Hordern, who is still on the ground. That was a late night, Anne-Marie. You were on the floor. I don't know how you even managed to get through that sea of humanity with some of the interviews you brought us with the likes of Chuck Schumer and Chris Coons. What is the lasting impact of this DNC?
Well, a tremendous amount of energy has been reinfused into this Democratic Party, and that was really on display, especially after her speech. I was standing near Chuck Schumer, near the New York delegation, and he was dancing in the aisle, and he was saying it was pitch perfect. To Lisa's point, there was a lot of joy and a message of hopefulness coming out of this DNC. Heavy on rhetoric, heavy on vibes, light Joe on details. And that's going to be the questions facing this campaign in the next 70 to 75 days. And even earlier, if you're a voter in Pennsylvania, maybe you're going to go do a mail-in ballot just a week after the debate on September 10th. And this is what the former president is trying to really put Kamala Harris in a corner about. What are actually her policies when it comes to things like the economy, energy, immigration? Because we have seen her in the past flip-flop, most notably things like Medicare, things like fracking. But what they're trying to do, Tobin Marcus of Wolf Research put it this way this morning, and I've been talking about it all morning because I think he really nailed it. Strategic ambiguity when it comes to policies. They want to come out and talk about potentially some of these populist ideas that land with swing state voters, but stay away from the details. How long does that last? That's a key question.
Well, absolutely right. Rick Davis was making a very similar point, having run a campaign and a convention, a couple of campaigns. Anne-Marie, why would you put all the details on the paper here and jeopardize a lead in the polls and the momentum, the spirit that you referred to in the room. But she's going to have to get more specific by September 10th, isn't she?
Well, I think if you're still an independent, you're unsure who you're voting for, she probably would need to get more specific. The American people seem to be hungry when you ask pollsters for more details on policies. And when you look at the polling, yes, she's been able to narrow that gap, bringing in some disaffected Biden voters who were really concerned about his age. But when you look under the hood of polling, the top two issues that American people care about the most, by far, is the economy and immigration. And when you ask them, who do you think has better policies, a lot of the time they'll say the former president, which is why the Trump campaign really wants him to stay on message, which he's struggled to do. But potentially, Joe, he is going to get an endorsement today. And also, that's something else we need to look at. How is that going to change the camp? He is going to be in Glendale, just a few miles away. You have RFK going to be in Phoenix. This is in Maricopa County. This was one of the key fights of 2020. Can that endorsement potentially shift to Maricopa County, another swing district like in Pennsylvania, to the Trump column? These are key questions. And I think, we are closer to the debate, so potentially more policy. You talk to people, and one of the key things I took out of this campaign, underneath all the excitement, was the fact whether it's Michelle Obama, Barack Obama, go vote. You cannot just take this energy and leave. You have to go, and we have to mobilize.
Let's see how that plays out in 75 days. Yeah, we were there listening, Anne-Marie. It's great to see you get home safe from Chicago. She's the last one left on the field with us here on Balance of Power on Bloomberg TV and radio. But I want to keep it in Chicago for a moment and bring in Congresswoman Robin Kelly as we add the voice of a Democrat with a district that touches the city that just hosted the Democratic National Convention. With us from our Chicago Bureau. Congresswoman, it's great to see you. Thanks for joining us here on Bloomberg TV and radio. You were in the hall last night. We've heard a lot about electric energy, but how did she connect with people who sit at home watching this show wondering what they're going to do in November?
Well, I heard from a lot of people sitting at home that didn't have the opportunity to be in the stadium or the arena, and they were very, very excited. And I had enough people asking me for tickets to get in, but I think people are very, very excited. They're ready to go to work. As you guys are saying, it just can't end here. We have to go back to our corners of the United States and register people to vote, inform voters, and make sure they get to the poll. Excuse my voice, too much screaming.
Yeah. That's going around. Congresswoman, a lot of people are peeking out of one eye and have no voice today, but that's the whole point of this. We had some pretty similar looks and sounds coming out of Milwaukee as well. Give us a bit of a clinic on this. The way resources are deployed, the way money is raised and spent, the way volunteers are collected, and the geography, the decisions that are going to go into the geography and the map over the next couple of weeks are going to be key to who wins this campaign. How will that unfold in the couple of weeks ahead?
Well, we're definitely, of course, going to look at the swing states. We don't expect people to come to Illinois, but Illinois is mobilizing to go to Wisconsin and Michigan. And from my district, the 2nd district, I've already recruited a number of people to go to Wisconsin and campaign and go to Michigan. And that's what we're doing all around the country. Those states that we look at as more blue are helping the states and deploying to the states that are more red or more purple. And that's how the resources will be divvied up. But like, I'm even going to Florida in the next week, and I know some of my colleagues right from the convention, they went to Michigan.
Well, Michigan makes sense to me. Florida is interesting. We're hearing more and more about what the Sunshine State might mean in this campaign. And God, I'm old enough to remember when that was the state you had to win. That was the swing state. And you wonder if some of these red states are turning purple in the ways that the Cook Political Report and Sabato's Crystal Ball are suggesting. Congresswoman, you're on the Committee on Energy and Commerce. And there's a big debate right now about how to keep the economy moving again and how to bring prices lower. Donald Trump says the answer is drill, baby, drill, knowing, of course, that we're already producing a record amount of gas and oil in this country. Would that work to bring prices down? Drill, baby, drill, starting his first day in office. What would that mean for our economy?
Well, like you said, we're already drilling, so I don't know how much that will work, but we do have to work on lowering costs, because even though we know things are better, there's a lot of positive, but still some people are not feeling it. So we have to keep continuing to look at the kitchen table, the grocery stores, what the gas prices are, even though those have come down some too, interest rates and things like that, because that's what touches people every single day. We can say what we want, but people go grocery shopping every week. But there's, just like housing, we have to look at, but like legislation that we've passed under the Biden-Harris administration will help bring people into the middle class. There's been a lot of jobs created, good paying jobs, and we have to keep doing more of that.
Well, of course, through the position on your committee, you're focused on this LNG export ban, which is something that's gotten a lot of talk here this year. Would Kamala Harris maintain that export ban while this review is taking place?
I'm sure, I don't want to speak for her, I shouldn't say I'm sure, but she probably would wait until, she got all the facts before she made a decision. She seems like, she's a strategic woman, and she's going to look at everything before she jumps to make a decision.
We're hearing from a terminal subscriber right now, Congresswoman, who seems to think there's an asymmetry in media coverage here. Kamala Harris is expected to provide a detailed policy white paper here, and Donald Trump says drill, baby, drill, and that's considered a proposal. Do you agree?
I do agree. He has a lot of little slogans that he puts forth, and people accept that. When he says the crazy things he says, people just say, oh, that's Donald Trump. And it just seems like we're held to a higher standard. I have always felt like that. And he could get away with things because he's Donald Trump that other people cannot get away with, cannot say, they have to prove themselves more. And I feel that's very unfair. And I'm sure because of her being a female, a woman of color, that's even more pronounced.
Well, in our remaining moment, Congresswoman, I'd love for you to speak to that, because Donald Trump continues to question Kamala Harris's racial identity, and after a night in which she spent quite a bit of time reintroducing herself, talking about her biography, I wonder if you think this is going to be a course through this campaign, if this is going to be a talking point through this campaign.
It may be a talking point for him, but yeah, there's a lot of first, but she's qualified. When they call her DEI, we say definitely earned it. She's had a brilliant career. She's been a good vice president, and he's the last person that she should have to prove herself to. But she's making her case, and we're going to help her make her case.
Well, I don't think she'll have too much trouble with the state of Illinois. And
no, but we're going all over.
I understand you've got some travel ahead. We'd like to keep in touch with you to hear how that's going, because this is far from over. But I do want to thank you for hosting us in Chicago for the week. I know that all of the folks representing that great city and the state of Illinois were very pleased with the way things went, and it was a great time for everyone to be there, Congresswoman. We had Milwaukee, now we have Chicago, the middle of the country that will decide this presidential election. I'm Joe Matthew in Washington. Yeah, we're back in the Amtrak corridor where we normally join you from here. Kaylee Lyons is in the field, and we've got a lot more ahead. We'll assemble our panel. As I mentioned earlier, Lisa Camuso-Miller and Brad Howard are with us, distilling what we heard this week and moving forward to the campaign and the election in November. This is Bloomberg.
It's 1:21 on Wall Street. I'm Amy Morris. Fed Chair Jay Powell says the time has come for the Federal Reserve to cut its key policy rate. The Fed chief also acknowledged recent progress on inflation, which has resumed moderating in recent months after stalling out earlier this year. And we check markets for you all day long at Bloomberg. Markets definitely responding to this. S&P 500 up 0.7% or 37 points. NASDAQ up 0.9% or 158 points. And the Dow up 0.7% or 291 points. The 10-year Treasury yield is down now at 3.8% and the 2-year yield at 3.93%. Peloton had its best day yesterday. Analysts are showing some caution now over the long term. JP Morgan downgrading shares of Peloton to neutral from overweight. Demand for Peloton's home workout equipment like bikes and treadmills took a hit after pandemic restrictions were lifted, reporting earnings that beat estimates, but triggering yesterday's rally. Shares now about 5% higher. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Amy Morris, thank you, and welcome to the Friday edition. Yes, it's real. You've made it to the threshold of the weekend. Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. We've made our way back to the Capitol from Chicago, where it all came to a crescendo last evening. 4 days, just like Republicans had in Milwaukee, and in this case, Vice President Kamala Harris accepting her party's nomination, introducing herself to some, reintroducing herself to others, and speaking at least in broad terms about policy, including the economy. Let's listen.
And as president, I will bring together labor and workers and small business owners and entrepreneurs and American companies to create jobs, to grow our economy, and to lower the cost of everyday needs like health care and housing and groceries.
There you have it as we assemble our panel the day after. Brad Howard is back with us, founder of Corcoran Street Group, Democratic strategist, and Lisa Camuso-Miller, Republican strategist, former spokesperson for the RNC, communications director, and, of course, host of the Friday Reporter podcast. Great to have you both here. Coming off of this speech, Brad, I'm compelled, having heard from a number of our listeners and viewers over the past couple of days, that there's a double standard in the media, asking for interviews and details on policy from Kamala Harris, where Donald Trump can say, drill, baby, drill, or I'll be a dictator for a day, and nobody seems to want to look under the hood to figure out how things might work, how they would be paid for. Is that true?
Well, I mean, absolutely. I mean, you go back to when Donald Trump first emerged onto the scene, he talked about very little policy, and the policy he did talk about, there was no way to implement, as he'd come to find out, everything from a Muslim ban to building the wall, which he never did. So, I think when they did roll out policy with Project 2025, and the American people had such a strong backlash that they dissembled the team and pretended it never existed. So, yeah, I think it's what Republicans realize is when they talk about policy, voters reject it on everything from abortion to, a Muslim ban to building a wall. I think when Democrats talk about policy, we do it in an inclusive way, and I think our policy is always better. Democratic problems have always been, how do we communicate our policy to voters? And it's usually because we don't lead with values. Like we're afraid to lead with patriotism, freedom, and values, and that's what Kamala's campaign is doing so beautifully. And last night's convention was so beautifully. When you talk about values, you get on the front porch so you can get in the House and talk about kitchen table issues. And so this idea from the Republican side that we've got to rush to talk about policy, Democrats aren't taking the bait, right? We are talking values. We are bringing people into the big tent party, letting them know that there's a home here, that whether you are an avid pro-Palestinian protester or whether you're a pro-Jewish voter, we can have a sensible debate within the party, hear each other out, and understand that Donald Trump is just bad for everyone involved.
Is that rational? Is that sensible to you, Lisa? Or would you get your candidate out to just take this issue off the table, put her out for an interview next week, add some details to the policy proposal, and get back on the road?
I mean, Joe, I think you're absolutely right on about this. We don't hold the same standard to a Donald Trump that we do for any other candidate. And so that's the kind of thing that we have to sort of keep in mind, the media, the people behind the candidate, behind the vice president, really, and keep that in mind, right? So that's going to be, regardless of how the rules are working, she's going to be asked about those kinds of things in her policies and how she feels about that. So any way she can communicate that in a way that continues to be successful, I think is the right way to go. But the rules are different. Donald Trump is going to Donald Trump. I said that in the earlier in the hour. It's the same kind of thing. And whether or not it's fair or not, you're hearing the same from the Republicans. They're saying that the media is covering the vice president differently. And this is the perennial fight that always happens. I think that the Democrats need to continue to do what they're doing, rolling out their policies, talking about the issues in the way that they are, in hopeful and future forward ways. And that's going to continue to be the winning way to go. Regardless of whether or not they put the vice president out there, they need to do everything they can right now to put risk under reward. Whatever they can do to continue to be in the positive forward momentum, that is the way that they're going to be successful on Election Day. And if Republicans aren't careful, they're going to overplay their hand. Donald Trump absolutely will overplay his hand. It's part of his brand and how he behaves. And that's the kind of thing that really is going to be the deciding factor when it comes to Election Day in this very, very narrow fight.
I don't know if you guys have your eyes on RFK Jr. any longer, but there is news today that he may be about to drop out of the race. In fact, this could happen about a half an hour from now. Last night, RFK Jr. withdrew from the ballot in Arizona. Now, reports were already out there saying that he might cut a deal to endorse Donald Trump, maybe get a job in the Trump administration in return. But Donald Trump also has a campaign stop today in Arizona where they are promoting a, quote, special guest. You know, the question everyone asks here, Brad, is where those votes go. There may not be a lot of them, but what would happen if RFK left this race? What would be the impact?
Well, let's be clear. A lot of the consolidation behind Kamala Harris's numbers were the folks that were disenfranchised with Joe Biden, either because of his age or issue on, Israel. The minute that Kamala became the nominee, you saw RFK Jr.'s numbers plummet, and they all went to Kamala. There wasn't a rush of Trump supporters to Kamala. We haven't seen that in the polling yet, though I think that's a possibility. What we did see was all the third-party minded, kind of what we call the double hater, procrastinator group that didn't like you. They all went to Kamala. And so that's why you saw a big rise in her numbers. The RFK Jr. folks that are left are probably a little more further to the right than Donald Trump is, or certainly more libertarian than Donald Trump is, I think, and a little more conspiracy driven. And so I think they're going to go home to Donald Trump. So I think Joe Biden getting out surged Kamala's numbers, in a little bit of a sugar high first, and then she carried it on. Has really brought in a whole new set of young voters into the equation that were never even involved. But I do think this is a net benefit for Donald Trump, particularly in a state like Arizona. But I got to tell you, with the Arizona, I think we just saw this week too that the ballot question will be on the ballot in Arizona about abortion protections. That's going to be a huge problem for Kari Lake and Donald Trump in Arizona, and a huge benefit to Ruben Gallego, the congressman there, who's a friend of mine running for the Senate. That abortion question is going to keep the abortion question front and center for voters in Arizona. We all remember, 6 months ago, that disastrous Supreme Court decision that took the abortion restrictions back to pre-Civil War era time. And so that abortion question being front and center, I think, is overall going to wash any kind of net benefit Donald Trump would get out of this endorsement from RFK Jr. So I do think overall there will be a net benefit.
Really interesting. Ruben Gallego, of course, speaking in prime time at the convention last evening as part of the veterans part of the show. Lisa, Brad's right. RFK Jr.'s vote share has come down a lot since Joe Biden left the race. He's kind of in mid-single digits right now. That, of course, could make a difference in a swing state with this race being so tight. How do you see this departure impacting things, if it happens?
I'm glad Brad brought it around to the young voter, because really the one thing that I'm hearing from really first-time voters and those really young voters, Joe, is that they were looking at somebody like RFK Jr. because outside of the fact that Donald Trump and Joe Biden were really sort of beyond sort of the reach for those youth voters, RFK was appealing to those voters because he was on TikTok and he was on these platforms where they're getting their news. And all of a sudden, with the change of the candidates, with Kamala Harris and this young, vibrant, campaign that really is appealing to people that are in a different generation. That's really where those voters came in. And so if you're looking at the TikTok voter, right? I mean, I use that roughly. It's just basically the folks that are getting their information from different platforms than traditional ones. If they're going with either an RFK or a Kamala, I suspect that that's precisely the calculation that's going on at the Republican in the RNC and in the campaign, is that this is a way to appeal to that side of the voter and that segment of the vote. But also, too, I'm not so sure that that's really going to be quite as successful, because there are so many parts of the RFK campaign that are just so far out there that really it would be surprising to me if those young voters would say, I'll choose a Trump over a Kamala.
Yeah. Well, I have to admit, I'd love to know what job RFK Jr. would hold in a Trump administration. If it's FDA, maybe the vaccines are. I'm not too sure.
Yeah, that's the one that they're saying.
That was what Ron DeSantis floated at one point as well. Yeah, it wouldn't be a big surprise, I guess, if you want to go to Washington and break it, as they say. But Brad, does Kamala Harris do anything here with some Kennedys? Get up there with Joe Kennedy, the former congressman, wrap herself with the family if this happens, to remind people that this is not necessarily the Kennedy brand. Remind Democrats it's not the Kennedy brand they remember.
Well, we've done it with yeah.
Sorry, Brad. That was for you.
Okay, so they did that when the group of voters that was going to RFK Jr. were like Democrats or longtime Democrats or young voters who are concerned about Biden's age. They were flirting with RFK Jr. So the family got up and said, no, this is not the Kennedy of the past. This is not the Kennedy that we all envision and love. And this is the opposite of that. I think they had to do that then. Now they don't have to do that. Like all the people that they're concerned about that would win over are already over in Kamala's camp. I think at this point forward, they just ignore RFK Jr. completely, as I think most people will. Donald Trump has a tendency to say, thanks for the endorsement, now get out of my way. And so I think you're going to see RFK Jr. shoved aside here. I'd be shocked if they use him in any meaningful way. You know, there's also some rumors that, Donald Trump is very unhappy with his vice presidential pick. So who knows what's going to go on there. But I heard HHS Secretary for RFK Jr., which I just is mind-blowing to me. The people that they put into these positions of authority who, can you create a conspiracy theory while you're the leader of the agency? I don't know how that works. So it'll be fascinating to watch. But I think it's a reminder that these are unserious people and we have serious problems. And I think Kamala, you look at I think the biggest thing I took away from the convention this week is look at the Democratic talent, the Democratic bench. I mean, my gosh, we had everything from Gavin Newsom, Gretchen Whitmer, Josh Shapiro, Mark Kelly, Wes Moore of Maryland, who I think is a rising star in the party. I mean, just down the line, just this incredible bench of young governors and senators and House members and veterans. Ruben Gay was a rising star as well. I think he's particularly potent because he not only is Hispanic, he speaks Spanish. He literally grew up, I think, homeless at one point, and went to Harvard and is, forced his way. And if you read his book, it's incredible, where he talks about all of his friends around him. His entire unit died, except for like him and a buddy. I mean, just an incredible story. You got people like that all across the country, and that's going to be fun to watch. So RFK Jr., I think he's going to be dismissed next week and we won't hear from him again.
Let him be, says Brad Howard. Great panel. Brad, get home safe from Chicago. You were great with us this week in Chicago. We really appreciate the insights and all of the experience that you brought to us here. Brad Howard at Corcoran Street, Lisa Camusa Miller, Friday Reporter Podcast. Great to have you both here this day after the DNC. We've got a lot more ahead on Balance of Power, only on Bloomberg TV and Radio.
It's 1:40 on Wall Street. I'm Amy Morris. Stocks saw bond yields fall after Fed Chair Jay Powell signaled a rate cut in September and left the door open for more cuts. Speaking at the Fed's annual gathering in Jackson Hole, Wyoming earlier today, Powell said that the time has come for policy to adjust. And he noted progress on inflation, saying the Fed can now focus on making sure the economy remains strong. Powell did not specify the timing nor the size of the cuts, but the Fed is widely expected to begin cutting interest rates in September. And we check the markets all day long here at Bloomberg. Markets definitely responding to this. The S&P 500 up 0.8% or 45 points. NASDAQ up 1.1% or 198 points. And the Dow now up 0.8% or 324 points. But bond yields are lower. The 10-year Treasury yield down 1%, now at 3.81%. And the 2-year yield is down now more than 2%, now at 3.92%. NYMEX crude oil is up 2.7% or $2.01, now at $75.02 a barrel. Sales of new single-family homes bounced back in July, advancing to the highest since May of 2023. The data imply buyers took advantage of those lower mortgage costs. There were also more homes on the market. And the world's growing love for instant coffee, you heard me, is keeping roasters reliant on the Robusta variety, once snubbed by coffee snobs. Even as prices reach the highest in about a half century, consumers are enjoying instant grab-and-go drinks more than ever. After a boost during the pandemic lockdowns, global soluble coffee consumption now on track to hit a record high. And a change in leadership at Nestle, the company announcing its CEO, Mark Schneider, being replaced after 8 years running the company. Nestle's Latin America chief, Laurent Freixe, will take over next month, and Nestle shares are slightly higher. And that is a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy Morris, thank you, and thanks for being with us here on the Friday edition of Balance of Power. We're back in Washington, D.C., having made our way back from Chicago and a late night at the Democratic National Convention, though not as late as some of the evenings earlier in the week. They did manage to get Vice President Harris on in prime time. She did manage to deliver the address, almost 40 minutes long, and a lot of it was reintroducing herself to Americans, her own story, the biography. Much of it was talking about Donald Trump's ideas and criticisms. Some of it included some policy, if I can call it that, or ideas, proposals around some of the issues that people are most concerned about, including, yes, the economy. But we still have a lot of meat to put on the bones here, as we've been discussing, and I know that that's the same case for Donald Trump, and I'll read about both later on Twitter here, because both campaigns are very sensitive about this, and they're trying to dole out information as slowly and at the most effective pace they can. You don't want to put too much on the table here, certainly before a debate. If you're Kamala Harris, when you're leading in the polls, Donald Trump, if you're trying to keep things together. It's where we start our conversation, the element of the economy, the ideas that we're hearing, whether things are paid for, whether either candidate is capable of lowering prices, and just what Wall Street makes of this new shakeup and all of this uncertainty around American politics right now. Our friend David Weston is with us here, as he joins us every Friday around this time, the host of Bloomberg Wall Street Week. And David, it's great to see you here. You've covered a couple conventions in your time. This is not a policy white paper, as they say. You get the platitudes, you get the soaring rhetoric, you get the campaign rally. When do the details show up?
Well, that's a good question, and whether they do need to show up. First of all, I got to say, I just am in awe of your ability to stay on the air, Joe. You've had quite a week. I'm really impressed, really impressed. I couldn't put a sentence together if I were you. but I think
be careful. You might hear some things.
but it is the big question, isn't it? I mean, I think we have some sense. We think we have some sense of what Donald Trump would do in terms of economic policy. I don't think we have a very good sense yet, at least, what the Vice President Kamala Harris would do if she were elected. She said, as you said, a couple of things. She's gotten some sniping at her from economists for some of what she said, particularly about that price gouging thing. At the same time, the question is, given the unusual nature of this, is she late enough into the process? Does she need to, in the next 70-plus days, come up with real policy papers or not? Or can she get through on that enthusiasm that I think they did generate, at least from what I saw out there in Chicago with you?
Yeah, that was quite a bit of show business, you know, from Oprah Winfrey to Pink. There was disappointment, David, that Beyonce didn't show up last night. You start wondering, what the heck do you guys think this is? It's not the Oscars. It's actually a political convention, but they managed to thread the needle pretty well on all of that stuff. I mentioned uncertainty, though. Where are investors' heads right now? Where's big money thinking and pointing without having a good sense of who's going to win in November and what policies they might bring?
Yeah, and one of the things that's really striking is the addition of Kamala Harris, substitution, I should say, really, for Joe Biden, has shaken Wall Street up some because they thought they knew where it was headed, and they're not quite so sure anymore. And I don't want to speak for all of Wall Street. I'm not capable of doing that. But there are those on Wall Street who are skeptical of Kamala Harris and where she would be going. They think that maybe she would take us to the left. We talked to Scott Bessent, a name you know. He was the CIO for George Soros at one point, and now he has his own Key Square Capital Group, and he advises Donald Trump regularly. And he didn't have much nice to say about what he's heard from Kamala Harris so far. This is part of what he had to say.
I think she is hard left. She's trying to maybe constructive ambiguity. And, I think maybe that's why CNN and the Washington Post came out and chastised her over the policy she talked about in Raleigh on Friday, because she's supposed to keep the mask on past November 5th.
However we read it. What about things like housing? She's trying to address that. We do have a housing problem in this country. I think you'd agree. Yep. We do not have enough housing. We're not building enough housing. She has a plan, at least, to try to stimulate that.
Well, there was no plan to say how she's going to stimulate it. What she's going to stimulate is buying. We don't need more house buyers. We need more houses.
So that's Scott Bessent, who is a partisan, I think it's fair to say. He does advise Donald Trump, and his name is even mentioned as a possible member of the team if Donald Trump gets reelected. At the same time, there are other economists who say there is a supply-demand issue, and you need to increase the supply of houses. In fairness to the vice president, she does have as part of her plan, as I understand it, some tax incentives for builders selling to first-time house buyers, which would get them building more houses, presumably. But Joe, we also talked to Larry Summers, who comes from the other side, perhaps, of the spectrum here, and he had some pretty nice things to say about Kamala Harris, at least what he heard last night. He said he was really encouraged that she emphasized opportunity so much rather than really trying to strike divisions within the society and within the economy. For example, between labor and management, that she really was talking much more about opportunity and being inclusive. He thought that was potentially a good thing.
The opportunity economy, as Kamala Harris calls it. But it's really important what you point out with the housing market here. For those who survived the downturn in 2007, the subprime mortgage crisis, they're not the same. But with the experience that we had then, David, the idea of doling out $25,000 to more than 1 million first-time home buyers makes you wonder if some people who shouldn't have homes end up in them.
Well, that's a really powerful point, something that obviously historians have gone back and taken a look at whether the government, and by the way, as I recall, both Democratic and Republican administrations really were giving incentives for first-time home buyers, and whether that went through too far and really encouraged the problem we had, that is something that we need to think about a fair amount. And there's also the little question of if you actually gave all that money in tax credits, where does the money come from? I mean, we're borrowing a fair amount already, and there are concerns. Larry Summers, in talking to him for the program tonight, he said one of the things that Jay Powell did not address today when he was at Jackson Hole is the problem of the deficit and what that could mean for inflation, in fact. And if we are just going to be adding to this deficit, it really does not help the economy, at least according to Larry.
Well, I'm glad you mentioned Jackson Hole, because this was an important part of our day earlier, of course. By the way, that speech ran, I think, shorter than Tim Walz the other night. I think all the politicians can take a cue from Jay Powell this morning. But the time has come is the headline. David, and if you're running for an election that happens in November, start cutting rates in September. Is that benefit incumbent? Because we could be in a world a couple of months later where the impact of those rates starting to kick in.
Yeah, a very powerful point. And that was one of the reasons people thought that if the Fed was going to cut, they'd do it earlier, so it wasn't sort of so close to the election. The one thing I think I can guarantee, I can't guarantee very much, is I suspect Donald Trump, if that happens, there's cuts in September, he'll be crying foul. He'll be saying this is not fair, this is political. And Scott Bessent has been talking about that as well. He thinks that actually there's a lot of politics being played in the Treasury, actually the Treasury Department right now, to support the economy, to support the stock exchange. At the same time, we have to remember Donald Trump has always been in favor of lower rates. So I'm not sure exactly how he can object to cutting rates. He tends to like lower rates. He is a real estate developer, and they tend to like low interest rates.
And he's not apparently above picking up the telephone and telling the Fed chair about that. As he told Bloomberg's Mark Niket, he was jawboning with Jay Powell. I can only imagine the conversation back when Donald Trump was in office and he wants an interest rate cut. Pick up the phone and call Jay. David Weston with us. I have to ask you, David, because for those who don't know, you were, of course, the force behind ABC News, the president of ABC News for many years, and you have a different view of television production and broadcast journalism than most people. We just got ratings for the last couple of nights here in Chicago, and when you put them all together, it's looking pretty good for the Democrats. But just last night alone, Kamala Harris with what appears to be a 15 share, Donald Trump 12.3, a 22% difference in eyeballs watching Democrats versus Republicans. Do we read into that, or is that like a Trump crowd size type of question?
Well, I'm not going to get into the size of crowds or the obsession. Is that what President Obama called it? A weird obsession that he has in crowds? Exactly. I'm not going to touch that with a 10-foot pole, so to speak. But I do have to say, sometimes in television, in my experience, it is not a surprise when the ratings come in high. And I'm going to say, I'm not surprised. Republican or Democrat, I don't care. I thought it was well produced. What I saw, I thought that was really well produced. They had a lot of pieces of business, we would call it, sort of like tricks to really keep you interested. And I thought, I wasn't there like you, Joe, but I thought it was actually pretty well produced. So I'm not surprised they came in high. I'm not sure that tells us anything particularly about what's going to happen in November in the election. But they put a pretty good television program on, considering.
Well, you consider the way that they folded culture and entertainment into the show. Might have given people more to look at than Hulk Hogan and Kid Rock did in Milwaukee. Although, of course, these are pretty interesting times that we're in, and that was following an attempted assassination of a former president. So what drives people to watch is always a fascinating thing to me. David Weston, we're all watching Wall Street Week tonight. What else do you have coming up at 6 p.m. Wall Street time?
We're going to talk about Google. Remember Google? They've got a trust judgment against. We got Jennifer Huddleston from Cato about exactly what the court decided, what it means for Google down the road. Are they really going to break it up? Are they going to go that far? But also what it means for the other big tech companies, whether this is the beginning of really more to come. And in fact, she suspects it's not going to make too much difference who the president is when it comes to Google on the antitrust enforcement. So we have a good talk with her about that, which affects an awful lot of people.
Well, this is great. I look forward to it. Thanks for coming on, spending a little extra time with us. David Weston, we missed him. He's the host of Bloomberg Wall Street Week, and that comes right after the late edition of Balance of Power here on Bloomberg TV and radio, as I mentioned. 6 p.m. Washington time. David Weston with some fascinating guests here that add a lot of color to the end of the week on Wall Street and, of course, here in Washington. I'm Joe Matthew in Washington, and glad you're with us here this day after the DNC with breaking news now on the terminal. And it involves Donald Trump. It does not have anything, at least directly, to do with the campaign. But special counsel Jack Smith, remember the January 6th trial here in Washington, has decided against seeking a major hearing to present evidence in the election interference case that he's brought against Donald Trump here before voters go to the polls in November. People familiar with the matter talking with Bloomberg News, and again, this is breaking right now. This means that it is unlikely that a so-called mini trial that we considered following the immunity, the presidential immunity ruling, which would include evidence and testimony from witnesses like Mike Pence, for instance, would take place before the election. So it is looking like the calendar has been cleared out in favor of Donald Trump here in an incredibly important development, knowing that he has had one after another legal victory during this campaign. And Jack Smith, who brought not one but two cases against Donald Trump, it appears we'll have to wait until after the election to bring this one forward. Such a hearing would have been the best chance for voters to review the evidence that he had gathered in this election interference January 6th case. And here we are now. Judge Chutkan has set September 5 for a hearing to review next steps. That, of course, only 5 days before the first presidential debate between Donald Trump and Kamala Harris. There are no slow news days these days, as we say, and we're going to be walking into a very busy period in September. As I said at the outset of this hour, the sprint to November starts now. And I want to thank you for spending great time with us in Chicago this week. 4 full days of coverage with the help of our great team here. Kaylee and I cannot do it alone, and we thank producers James Mahoney, Matt Shirley, Tyler Kendall, of course, with us on the air as well, Elizabeth Sedrin and Cece Cherendoff, along with our global production team led by Stephen Fosberg. They are the best in the business. We'll have a lot more ahead, as I mentioned, on the late edition of Balance of Power. That starts at 5 p.m. Eastern Time here on Bloomberg. Straight ahead, Bloomberg Business Week with a lot more to come. Keep it right here on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Very good afternoon, everyone. Live on Bloomberg TV Radio, streaming on YouTube and Bloomberg Originals. I'm Tim Stenovec, and it is Bloomberg Business Week. Carol Masser is off today, joining us in her place. Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton. Jess, happy Friday. Happy Fed Jackson Hole Friday. How are you?
The day we've all been waiting for, finally hearing from the man from himself, of course, Jerome Powell. And looking at the market reaction here, the S&P 500, I mean, it is off a little bit of the highs, but on pace for a second straight week of gains, and it's actually added close to $4 trillion since that low we saw earlier in August.
All right, we are all over the markets and all over Jackson Hole. As Jess mentioned, stocks climbing, bond yields falling. We're going all in on Jackson Hole over the next hour because, in the words of the Fed chair, the time has come. On that, live from the Jackson Hole Economic Symposium, we're going to hear from Chicago Fed President Austin Goolsbee in just a few minutes. Michael McKee has that interview. Also, post Jay Powell's speech, we're joined by Bloomberg Economics U.S. economist and Bloomberg Intelligence's chief U.S. interest rate strategist for what we need to know about the macro environment and rates reaction.
And then also, of course, we can't leave this out as the DNC wraps up. Kamala Harris's campaign is heavy on vibes and light on policies. Of course, a dispatch from our team in Chicago, Tim.
All that and more over the next hour. First up, though, a check on the day's trade and top business stories. Here's Amy Morris in for Charlie Pellet.
All right, thank you, Tim. Jackson Hole indeed. Stocks climbed, bond yields tumbled after Fed Chair Jay Powell reinforced expectations that the central bank will slash interest rates in September, leaving the door open for even more cuts. And we check markets for you all day long at Bloomberg. The S&P 500 is up 0.8% or 43 points. NASDAQ up 1.1% or 194 points. And the Dow up 0.8% or 335 points. The 10-year Treasury yield is down 1% now at 3.8%, and the 2-year yield at 3.9%. Also, new home sales for July bounced back to the highest level since May of 2023. Buyers taking advantage of lower mortgage rates and more listings to choose from. Contract signings on new single-family homes increased 10.6% just last month to a 739,000 annual rate. The pace beat all estimates in a Bloomberg survey of economists. And economists surveyed by Bloomberg anticipate a sharper slowdown in the U.S. labor market, seeing the unemployment rate peaking at 4.4% by the end of this year and holding there until mid-2025. That's a Bloomberg Business Flash. Now back to Balance of Power with Tim Stenovec and Jess Menton.
Thank you so much for that update, Amy. I certainly do appreciate it. Well, Fed Chair Jay Powell said the time has come for the Federal Reserve to cut its key rate policy, affirming expectations that officials will begin lowering borrowing costs next month and making clear his intention to prevent further cooling in the labor market.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. While the task is not complete, we have made a good deal of progress toward that outcome. My confidence has grown that inflation is on a sustainable path back to 2%. Today, the labor market has cooled considerably from its formerly overheated state. The cooling in labor market conditions is unmistakable. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
There you have it, some of the highlights from a 16-minute speech in 47 seconds from Jay Powell out there in Jackson Hole. Stocks climbing, bond yields falling, with the 2-year falling about 7 basis points, the 10-year falling 4 basis points, then 3. We've got a great roundtable to give us what we need to know all about Jackson Hole. Stuart Paul is Bloomberg News U.S. economist, Bloomberg Economics U.S. economist. He joins us here in the Bloomberg Business Week studio. Ira Jersey is Bloomberg News chief U.S. interest rate strategist. He joins us from New Jersey. Ira, good to have you with us this afternoon. Stuart, good to have you with us this afternoon. The time has come. The question I have for you, Stuart, is the Fed behind the ball? Did the time come a couple months ago when the Fed should start adjusting policy?
I think the Fed is a little bit behind the ball. As we've seen, the labor market has been cooling pretty dramatically. As we just heard Fed Chair Powell say in the drop, the labor market has been cooling unmistakably. There were, quote, several FOMC members who were ready to cut in July. That probably would have been a more prudent move, especially with the benefit of hindsight, since we saw that payrolls report after the July FOMC meeting, but he also did essentially totally seal the deal on a September cut. So they might be a little bit behind the ball. Doesn't make a huge difference in the broad macro scheme of things, but it most likely means that they will be moving in September.
Ira, I want to bring you in the conversation here. Looking at the 10-year Treasury yield, trading around 380 here, and you were just talking to me the other day, along with Paul Sweeney, about how there's some key technical levels just beneath that threshold. What do you think the positioning in the bond market is telling us in reaction to this news?
Yeah, I think a lot of the move that you're seeing today is probably some short covering. So some people who were maybe thinking, oh, maybe the Fed's not going to go as quickly, or if the Fed doesn't go in September, that Treasury yields might actually go up. So some of it's short covering, but really, the real place that you're seeing the move based on what Jay Powell said really is the 2-year yield and what's going on the very front end of the yield curve. Because with a 10 basis point rally in the 2-year right now, that's suggesting maybe another half a cut is going to be made by the end of the cutting cycle. So you're going to see over time that 2-year yield continue to fall pretty precipitously. Doesn't matter if the Fed goes 25 or 50 in September. I mean, if they go 50, it'll probably rally a little bit more. But ultimately, really what we're looking at now for the bond market is where we're going to be at the end of 2025 or early 26. And that's where, if we're going to be lower than say 3.1%, which is right about where the market's priced, then 10-year yields are going to stay where they are. If we're below that, then 10-year yields could rally pretty substantially.
Yeah, talk more about where you see the 10-year going, because we're down about 5 basis points. We can go ahead and round that up. What's your outlook, Ira, for the 10-year moving forward?
Yeah, so I think that the market kind of is now priced to where we thought that they would ultimately get to. So it's a little bit closer to fair value based on where we are today. So we see the 10-year yield moving down toward around 3.5, 3.25. We think that it will hover there. And the way that you get this, what we call bull steepening of the yield curve, so the long end kind of hovers at 3.25 to 3.5% for a couple of years, but it's the 2-year yield that goes down into maybe even to a 2 handle, because I do think that the market's going to overshoot, and that ultimately the Fed is going to have to probably cut more than what the market's currently pricing. That might be a little bit different than what Stewart and his team believe, but yeah, a lot of the things that I'm looking at suggest that maybe we're going to get a more pronounced slowdown than what the market's currently priced for, and that's why in some ways maybe Stewart thinks that the Fed's behind the curve, and if the Fed has been behind the curve, just get a bigger fall later.
So, Stewart, especially because we were waiting for this particular event, the next jobs date is actually 2 weeks from today, so September 6th. And so there's this debate going on in financial markets once again about 25 or 50, but clearly it seemed like Powell was signaling that potentially 50 could be on the table here. How much, especially when it comes to that jobs report, is going to be really gleaned? And then within the hood of that, whether or not that was kind of a one-off that we saw with a hiring slowdown in July, or whether or not that maybe that wasn't a trend.
Well, so we have a lot to unpack there. Yes, I think that the size of the cut in September does hinge a lot on what we see in the jobs report. I don't think that it's just the case that it was a one-off in July, that the pace of hiring was slower than was anticipated. As we saw with the QCEW release, a little bit of a technical thing going on in the background at the Bureau of Labor Statistics. There was a major downward revision. 818,000 fewer jobs were added between Q2 2023 and Q1 2024.
I'm glad you brought that up, because there was focus on that very clearly. Obviously, it's annualized. It went from last April to this March. But also Goldman Sachs economists, and I'm sure you saw this as well, they were arguing about how with some of the wage-related data, it didn't include undocumented workers, so it might underscore and actually not show really the true strength of the labor market if up to 1 million of them weren't actually included in that. So how do you kind of frame that and sort of take away that when maybe job strength still is maybe potentially more elevated?
I think that you need to look at the broad scope of all the labor market indicators that are out there. I think that once you factor in the slower pace of hiring, whether you're factoring out or factoring back in undocumented workers, what we now have in hand is much better aligned with what we've seen in the unemployment rate, especially over the past 6 months. And so if you're taking into account both the establishment survey, the household survey, jobless claims, worker sentiment, what you see from private sources like ADP, things are much better in line right now, and they show that the labor market has been cooling. But back to what we heard today at Jackson Hole, Powell, I think, kept the door open to a 50 basis point cut, more and a faster pace of cuts, to Ira's point, as compared to some of the other Fed speakers that we've heard. The key word seems to have been gradual or methodical every time we've heard from a Fed speaker over the last 2 weeks. Powell specifically did not use those words, and that's not the sort of thing that's just an oversight at the Fed. I think that's probably a deliberate choice.
I'm glad you brought that up because that was something I was noticed as well. Ira, I wanted to go back to you because especially when we're thinking about what the next catalyst could be, obviously we were just talking about the next jobs data 2 weeks from now, but next week we'll have another update to the second quarter GDP, but we already gleaned information from that about a month ago. What about any sort of auctions coming up in the Treasury market or other catalysts, obviously heading into Labor Day?
Yeah, so next week we do have the month-end auctions. So we have the two-year, 5-year, 7-year auctions, and those actually settle in September, the way that the calendar works this year. So it's kind of a weird dynamic. You know, the GDP data I think is mostly going to come and go, but the PCE data is going to matter, right? So where the personal income spending and then that infamous PCE deflator, the Fed's preferred measure and gauge of inflation, is we're going to get all of that data next week. So I think those will be pretty interesting. Particularly, I think some of the income and spending data, because even though the job market seems to be slipping, if incomes continue to rise pretty aggressively, then that can offset at the aggregate level some of the slowdown in the job market, and certainly that's something that the Fed is going to take into account when it deliberates, if they're going to go 25 or 50.
Stuart, there were a couple sentences from Powell's speech earlier today that really stuck out to me. Quote, "The upside risks to inflation have diminished, and the downside risks to employment have increased." In other words, they're less concerned about inflation taking off, once again, and more concerned about unemployment taking off. Do you agree with that sentiment?
Absolutely. I think that the upside risk or the right tail for inflation has essentially been clipped. I do expect that inflation is going to flutter, at least headline CPI inflation is going to flutter around that 3% mark. I think that there is much more room for a major upside move in unemployment. It's a pretty rare case or a pretty rare set of instances when you'd see the unemployment rate just sort of inch up slowly over the course of a year, 2 years, or even just rise a percentage point and stop. That's a pretty rare occurrence. Typically, people start getting a little bit more cautious. They stop spending when they see the unemployment rate rising. And when that's the case, you start to see the risk start mounting that the unemployment rate gaps up. So I would totally agree with that sentiment that the upside risk to the unemployment rate is now far more substantial than the upside risk to the inflation rate.
Hey, Ira, help us out here with the path of rates for the remainder of the year. Investors and traders are pretty much understanding what's going on or agreeing what's going on in September, but what does the path look like to you for the rest of 2024?
Yeah, so 75 or 100 basis points by the end of the year is what's priced into the market, and I think that the risk, there's a risk somewhat symmetric there, where maybe the Fed decides that they are going to be cautious and they're going to do the quote unquote measured pace or whatever. And they're going to just go 25 basis points every meeting, and they could do a 50 if they really want to shock the market a little bit. I suspect that the Fed will start off a bit cautious and then ease into going a little bit faster if the economy does start to slide, as I suspect that it might in the first half of next year. So this year, I think I'm not going to say we're priced at perfection, right? Because we are going to see moves of 10, 15 basis points here and there. But I suspect that volatility, now that we know that the Fed's going to go, now that we know that the Fed is, they're going to go 50 or 100 basis points by the end of the year, you'll actually see realized volatility start to ebb a little bit lower as we get to that point. I'd like to step back just a little bit and talk about that employment versus inflation standpoint thing that you guys were just talking about. The way that things developed, the Fed really was only focused on one thing for 2 years, right? They were only focused on inflation. The employment rate could have gone anywhere one way or the other. I think the important bit from today's statement is that it's an acknowledgement that the Fed's dual mandate is now again dual. Effectively for about a year and a half, 2 years, they had only a single mandate, and that was inflation. Now that we knew that had to shift a little bit, but this is the first time that someone at the Fed is as explicitly as Jay Powell did this morning say, hey, our dual mandate's back. We care about both things now. It's not only inflation anymore. And that really is what gives them the runway to be able to cut interest rates in September.
A big thank you to both of you guys for joining us on this Fed Jackson Hole Friday. That is Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Also here in the Bloomberg studio in New York, Bloomberg Economics U.S. economist Stuart Paul. Yields, the 2-year rather, down 10 basis points. Well, the 10-year down a little over 5 basis points as we speak. Well, speaking of Jackson Hole, let's head back out to Jackson Hole, where we find Michael McKee, international economics and policy correspondent. He's sitting down with Chicago Fed President Austin Goolsbee. Hey, Mike.
Hey, Tim, thanks for having us, and thank you for joining us.
Yeah, great to see you.
You were not surprised. You've been calling for the Fed to cut rates soon for quite some time. So basically, you got what you wanted today.
Hey, look, you know the rules. I'm not to comment on what anybody else from the FOMC says. As you say, I think we set a rate pretty tight more than a year ago. Inflation's kept coming down, so in the real rate sense, we've been tightening. And when the conditions are not overheating, you got to be really careful with that kind of passive tightening. Seemed pretty definitive, the statements that Chair Powell made there in his remarks. And I think that this reflects the reality of the economy, that we've got to keep our eye on the employment side of the mandate now. This is what the path down to 2% inflation looks like. You know, you got some bumps, but I think that side's looking a lot better.
As you say, you've been worried about being too tight for a while now. The chair did not discuss how big of a cut might be coming for the first one. What do you think the economy needs? Do you need to see 50 basis points?
You know, I don't like ahead of time, as you know, picking out specific numbers. In my view, the SEPs over the last year have made pretty clear that almost everyone on the committee thinks that conditions will show inflation coming down, the unemployment rate going up gradually and settling in, and that there will be multiple cuts over calendar 24 and calendar 25. And that feels like what the path is from conditions so far to me.
Well, we start down the golden path, or as the chair would say, the golden road to unlimited devotion. How fast do you move? Do you think you need to be gradual? Are you open to bigger moves if the data suggests?
Look, you've seen many times the size of the table. It's a big enough table in the FOMC room that you can fit everything on the table. I think we should always put everything on the table, and what will warrant the speed at which we cut rates or how much we pause on the cutting will be determined by how the totality of the conditions show. I think there are definitely warning signs, though there are also signs of strength. So on the warning category, the unemployment rate drifting up is definitely a warning sign. If you look at the delinquencies on credit cards, if you look at small business defaults, all of those are in the warning category. On the stronger category, GDP growth's been pretty robust. Consumer spending still pretty strong, driven by, I think, this robust wage growth. So we just got to watch the whole thing. And on the job market side, if you start to see an increase in direct layoffs, that would be a clear warning sign from past business cycles that unemployment rates rising from layoffs is a sign of recession.
If you cut interest rates by 25 basis points, a quarter percentage point in September, that's not going to do a lot right away. How far do you think you need to go before it will really affect the economy?
Look, I think this is the right way to think about it, that it's about the long arc of both the conditions and the monetary policy. Monetary policy does not work instantaneously, and if anything, this strange recovery has shown us that even the normal rules of monetary policy transmission maybe don't apply exactly right now as they have in the past, whether from excess savings or from mortgage rate lock-ins or supply chain things had depressed manufactured durable goods consumption during the pandemic, so there's some pent-up demand. All of those are primary channels normally. When we change the rates, that's the first place you look, but in each of those cases, it's looked a little different. So I don't think it makes sense to get into a big debate of is 25 in this month or 50 at the next meeting. The little gradations like that aren't what matters the most. What matters the most is over the long arc from now to if we come back 1 year from now, would we expect to see a lot of rate cuts if conditions keep evolving in this positive way? In my view, yes.
Well, if we come back 1 year from now, and I presume we will, and we'll have you sitting there, what do you think the rate would be? Where do you think neutral is these days?
It's far from where we are, I think. You're seeing unemployment continuing to rise, and it's worth noting, as I say, the SEPs that come out every 3 months have been saying that people thought unemployment would settle in 4.1 or something like that, and we're already pushing through. So the determination of what is neutral is going to have to go off of the rough and ready guide of does it look like things are settling in, or does it look like conditions continue to worsen? You know, I've been less of a fan of trying to use a model-based estimate of R star in real time as a determinant of monetary policy. I just think it's not that easy to do that. But that said, we're very tight, so we know which way it should be going from this point if conditions keep improving.
But fair to say, you're not going back to zero.
I don't know. Everything's always on the table. You don't know. It certainly does not seem. If the barring crises, if you look at the SEPs, the long-run interest rates are above that the members of the FOMC forecast to be appropriate are well above zero, and it doesn't seem right now, if conditions progress how they are, that it would be that far down.
What are companies in your district telling you about how they see the economy evolving over the next 6 months to a year, and how they see rate cuts affecting them, or do they in the short run?
Well, our district is heart of the Midwest. It's more manufacturing intensive, and autos especially, than any other district. It can be sector specific. There are some sectors that are feeling the pinch right now in a tough way as spending shifts back away from goods back towards services. There are manufacturing sectors that are suffering. But for the most part, we've heard a lot of steady as she goes. It's not getting worse, but it's not getting better. So in a way, that's encouraging, not expecting recession. That in the job market, it's easier to find people. The labor shortage mostly solved. The supply chain crisis mostly solved. And from the business perspective, some complaint that they don't feel like they can pass cost increases on to customers anymore, that there's pushback from the consumers. From the central bank's perspective, that's good. That means probably inflation's coming down. And overall, a recognition that we're tight. I mean, for companies that are out trying to borrow from banks, smaller businesses, et cetera, credit conditions are as tight as you'd expect with the rates high like this.
What about average Americans? What sense do you pick up from them about their willingness to continue to spend?
Well, a lot of that, as I say, I think is tied to wage growth, and wage growth for the last year has been robustly higher than the rate of inflation, so real income's rising. But for sure, you hear when we go out and talk to people in the community or community leaders, you hear a lot of fretting over the affordability, especially of different, like housing affordability, a huge issue, and the price level, upset that the price level is a lot higher than it was in previous years. So I'd say there's some question mark on the strength of the consumer. That said, if you look at actual consumer spending in these latest reports, it's been still fairly robust.
Well, thank you very much for joining us today. Austin Goolsbee from the Federal Reserve Bank of Chicago. And, of course, now we've made a date next year. We'll have you sitting here. We'll figure out what the interest rate is.
Maybe the moose will come back.
We can hope so. We'll send it back to you.
A big thank you to Michael McKee, International Economics and Policy Correspondent out there in Jackson Hole, Wyoming, with Chicago Fed President Austin Goolsbee. It is Bloomberg Business Week. I'm Tim Stenevec, and that is Jess Metton in for Carol Master this afternoon. Jess, some really interesting comments from Austin Goolsbee just now, especially when it comes to what he's hearing from companies within his district. As he mentioned, it's a more manufacturing-heavy district, of course, in the Midwest, manufacturing and autos. But they're not expecting a recession, saying that the labor shortage is mostly solved, the supply chain crisis is mostly solved. And here's an interesting one, which is good news for the Fed. There's some complaint that they don't feel like they can pass along price increases to consumers anymore.
Another big thing that I was keeping a close eye on is what he was talking about when it comes to the 25 basis point versus 50 basis point debate in September. And he pushed back on that, saying that's not necessarily what matters. It's more over the course of the next year. So he said expect multiple cuts this year and next.
Okay, we'll have to see what happens. Finally, housing affordability, an issue for the folks in his district. They're upset that the price level is high, which I think is an interesting thing to say. Not talking about inflation, but sort of the disconnect between what inflation is and what high prices are.
Right.
The rate versus what the prices actually are. That also has serious political implications. And then finally, a question mark on the strength of the consumer. If you did miss any of that interview, you can check out the full interview, of course, on the Bloomberg Terminal. Now let's get an update on the top business stories and what's going on with the market. Here's Amy Morris.
All right, thank you, Tim. Fed Chair Jay Powell says the time has come for the Federal Reserve to cut its key policy rate. He also acknowledged recent progress on inflation, which has resumed moderating in recent months after stalling out earlier this year. And we check markets for you all day long here at Bloomberg. The S&P 500 up 0.8% or 48 points. NASDAQ up 1.2% or 212 points. The Dow up 0.8% or 351 points. The 10-year Treasury yield is now at 3.8% and the 2-year yield at 3.9%. Peloton had its best day yesterday. Analysts, though, showing some caution over the long term. JP Morgan downgraded shares of Peloton to neutral from overweight. Demand for Peloton's home workout equipment took a hit after pandemic restrictions were lifted. Peloton reported earnings that beat estimates, which triggered yesterday's rally. Shares now are 8.7% higher. And ahead of his speech, where he is expected to drop out of the presidential race, little political news here for you. RFK Jr. says he will be endorsing Donald Trump. And that is a Bloomberg Business Flash. And now back to Bloomberg Business Week with Tim Stenevec and Jess Metton.
Hey, thanks so much, Amy. Do appreciate that update. As Amy just mentioned, some news coming via the Associated Press. We are learning that Robert F. Kennedy Jr. says in a court filing that he plans to endorse Trump. This is from the Associated Press. He is said the campaign also requested that he be removed from the Pennsylvania ballot, though it was not immediately clear that he was officially dropping out of the race. It comes a day after he sought to be removed from Arizona's ballot, where he's running as an independent.
Yeah, it's really key, too, because when you're thinking about what's happening and on the back of the DNC convention this week, and especially people trying to glean from Kamala Harris last week, she was talking about this opportunity economy and how she was going to roll out more policy sort of ideas from her potential administration here. So people are waiting on that in the next couple of weeks, too.
Well, speaking of Vice President Kamala Harris, she last night formally accepted the Democratic presidential nomination on Thursday. Delivering a deeply personal speech, she vowed to prioritize a fight for the middle class and Americans' reproductive rights. Harris and her fellow Democrats spent a week gathered in Chicago, reinvigorated, eager to seize the mantle of progress and extend a hand to the undecided voters that they'll need to recapture the White House.
I promise to be a president for all Americans. You can always trust me. to put country above party and self, to hold sacred America's fundamental principles, from the rule of law to free and fair elections to the peaceful transfer of power.
There you have it, Vice President Kamala Harris last night at the Democratic National Convention accepting her party's nominee for the presidency. Jody Schneider was there. She's Bloomberg News political director. She joins us now from our Washington, D.C. bureau. Jody, you're coming off about a week in Chicago. Just give us your takeaway, especially compared to what we saw from former President Trump's acceptance speech, the energy around the RNC versus the DNC. Big takeaways.
Yeah, well, Tim, first of all, Kamala Harris really needed to kind of introduce herself, or reintroduce herself, if you will, to the American people. Donald Trump, people knew, and it was kind of, his speech was a continuation of who he was, but Kamala Harris had to spend a fair bit of her speech telling her story. We know her as vice president, but she didn't have, until recently, as big a footprint in politics as she's gotten just in the past little more than a month since Joe Biden decided he was going to step aside and not run for re-election. So this was a chance for her to tell her story. She told her story of being the child of immigrants, of growing up in a working class neighborhood, of going to college, deciding to be a lawyer and fight for justice, her days as a prosecutor and then a senator. She also wanted to give the sense that she was experienced, that she'd had a lot of experience already. And she did some talk about policy initiatives, but really it was more framed in this fighting for the middle class. She took swipes at Donald Trump, particularly around the issues of democracy and of him saying that he would not necessarily support democracy. He would support some authoritarian rulers because he wanted to be that. That was her biggest charge against him. So it was a couple things that were going on with the speech. It was a lot of energy in that hall. It really was electric all week. Partly this seemed to be kind of a relief rally, if you will, that there was so much relief that they had a candidate that they could get behind, they could get excited about, where there had been really not much excitement as of late of Joe Biden. Joe Biden was mentioned, he was thanked, but this was really Kamala Harris's convention.
So, Jody, when next couple of weeks, as people are waiting for more of those policy specifics when it comes to that opportunity economy that she was talking about for the middle class, what do you think she's going to be more specific on when it comes to, say, tax policy and things like that versus other broader issues that she's going to have to be more vague on just in case it hurts her on the campaign trail if they're too specific?
Yeah, I think she's going to try to continue to talk in kind of broader policy terms. I don't know that we're going to hear a ton of specifics. I think we will well more around an economic policy, perhaps. But really, so far, we haven't seen that. We've really seen only, some, even in her economic policy rally, the speech she gave, she really talked more in generalities than in specifics. And she's also going to have to balance, what she's kind of done in the past in taking on corporations, on, more to the left, more taking on regulators, and trying to find more of a center to try to win over those undecided voters and to get those swing states that she badly needs if she wants to become president.
Jody, how did she last night put a little daylight, or not, between her and President Joe Biden and Joe Biden's policies?
Yeah, she talked about Joe Biden at the top, Tim. She thanked him and said, she had loved working with him. But then she took it on as though this is what she would do. There was many more mentions of Donald Trump, criticisms obviously, than there were of Joe Biden. So it really did seem to be, hey, this is mine now, and I'm running, obviously with her running mate Tim Walz. And that's a big question. That's a criticism that the Republicans have seized upon this week, that hey, and Donald Trump has said this, hey, if she's been vice president for 3.5 years and she's touting that experience, why isn't she owning this? Why isn't she owning particularly the economy and some of the problems in the economy? So that will be something she'll have to face. And of course, she'll have to face questions about the border and border policy. Those are two big vulnerabilities for her. The economy and the fact that even though it's doing well in terms of many metrics, inflation is still historically high, and people are still feeling that they're not, that prices are too high for them, especially on everyday things.
Right.
So she's going to have to balance that with this middle class economic vision.
We only have about 30 seconds left, but of course, as you know, we have the debate coming up on September 10th on ABC. What do you think are the big things people need to watch out for ahead of this? And just quickly.
Yeah. A lot of it is going to be her versus Donald Trump. How does Donald Trump treat her, and how does she push back? And can she do that? I mean, again, Hillary Clinton had a lot of trouble doing that against Donald Trump when she ran against him. How is Kamala Harris going to do that if he becomes kind of the attack Donald Trump, that attack personality that we had seen in past debates?
A big thank you to Jody Schneider. She's Bloomberg News political director, joining us from her Washington, D.C. bureau, where she finds herself after many, many days in Chicago. Jody, get some rest. Have a good weekend. Coming up next, we're going to stick with politics. We're talking about Kamala Harris's campaign being heavy on vibes, but light on policies. That's coming up next. We're seeing green across the screen. The S&P 500 up 0.9%. The NASDAQ Composite up 1.2%. You're listening and watching Bloomberg Business Week.
It's 2:40 on Wall Street. I'm Amy Morris. Stocks saw bond yields fall after Fed Chair Jay Powell signaled a rate cut in September and then left the door open for even more cuts. Speaking at the Fed's annual gathering in Jackson Hole, Wyoming, Powell said that the time has come for policy to adjust, and he noted progress on inflation, saying that the Fed can now focus on making sure the economy remains strong. Powell did not specify the timing nor the size of the cuts, but the Fed is widely expected to begin cutting interest rates in September. We check the markets for you all day long at Bloomberg. The S&P 500 is up 0.9% or 50 points. NASDAQ is up 1.2% or 213 points. The Dow is up 0.9% or 357 points. The 10-year Treasury yield now down 1%, now at 3.8%. The 2-year yield down 2.4%, now at 3.9%. The world's growing love for instant coffee, keeping roasters reliant on the Robusta variety, once snubbed by coffee snobs, even as prices reach the highest in about 50 years.